No, Erica.
Oh, sorry about that.
1 second. Let me just. My
Morning,
wife's.
Erica.
1 second.
Good morning.
Having crutches delivered. Hold on 1 second.
When I put my AirPods on, it switched to unmute for some reason.
Yeah, mine does the same thing. I hate that.
It's crazy. I checked before. I was on mute, and then when I put the AirPods in, I didn't check again, and it was
Yeah,
unmuted.
switch
It's right here. We had 3 balls. I got 3 balls yesterday. Yeah, which one? Make sure it's Columbia.
You got 3, 1 for each of them.
Make sure. Okay, can you do that for me, babe? Yeah, babe. All right, thanks. All right, great job. All right. All right, guys. Let's get going. Got majority of folks on that will be joining anyways. So let me know when you guys can see it. All right. Let me share. All right. I will time box these as much as I can, just so we don't go off topic. So that way we can get some live stuff and then also cover the market update, because I will probably be drugged up a little bit after this. So I will do the market update along with the class today here. So I want to touch on auction process, because I think this is fairly important for you guys to understand. If you don't understand this, this is your opportunity to ask questions and make sure that you come out of this class kind of understanding how this works. Market auction process, right? It's no different than any other auction that you ever been or heard, or just going to the dealer, right? I mean, there's a buyer and a seller, and somebody's facilitating the trade, right? In that case, the dealership is the middleman, the manufacturer is the seller, and you're the buyer. If you don't have those meet at the price, there's potential, or there's not potential. You're just not going to have a transaction that occurs between the buyer and the seller. So the price, the lowest ask and the highest bid have to meet, and that creates a transaction. I won't go into the details not to confuse you, but the type of orders that are executed on that auction, there's a lot, right? There's passive, there's aggressive orders, and that's whether it's at the bid or at the ask, and then there's other points, but I'm not going to go in that rabbit hole. We'll save it for footprints class. But the key is that we have buyer sellers, and they're trading efficiently, right? Typically, you trade within a balance. When the market's happy and people are, gladly buying something, you're going to be in the balance here, like this box right here. You're just going to trade. Then typically something comes in, right? Whether it's news, whether it's earnings, or just some kind of macro updates that we have in the economy, and it can create an inefficiency, and then the market goes out of that range, whether it's higher or lower, and it looks to find what? The closest value to the one that it's leaving. So if it's leaving out of this value here, for instance, it's going to have an imbalance, and this scenario is going higher. Then, comes the acceptance piece. When it gets to the range high, it needs to hold it. And it needs to hold that, because if it fails, what does that tell you about the auction higher? That means the auction higher was not accepted, and most likely we're going to head downwards, right? We'll talk about the setups, right, that you can play with this on smaller time frames day to day. There are certain setups that you can play, when you're breaking out a balance with on higher time frames, whether it's 3 months, yearly for your long-term portfolio. We'll cover that as well. Then you have the rejection, right? So if you don't bounce here, right, where I was just kind of circling here, if you fail to hold that previous balance high and you lose it here, then you have a high, probability from the opposite, which would be the top here to the bottom, to seek buyers. And then if the buyers don't respond, then you have another shift in the value, shift in balance going downwards. But that usually brings stability, because let's volume speed up the price action or slows it down?
It speeds it up
Can you
No,
tell me
slows
why?
it down.
Can you tell me why it speeds it up?
because increasing buyers drives price higher, increasing sellers drives price down.
But for me to buy, what has to happen?
The buyers have to be happy with the price.
But you have to have a seller that's going to sell to you at that price, right?
Yes, yeah.
Okay. And if there's a lot of people that are buying, a lot of people that are selling in a range, is the price going to go faster or slower?
Slower.
So just think of yourself. You go to a marketplace and you want to buy apples, right? You get there and the guy has the best apples. He has the Cosmic Crisps and they're selling $3 a pound. And everybody, there's a line of them. I mean, you guys have seen it. Something is in demand. People go and camp out Thanksgiving, right? So you're in the line for apples to buy them. And if the price was not good, would there be a line?
Probably no, there would be no line.
Okay. So if the price and what he's asking for those apples and what you're willing to pay matches, that means you're going to have a high volume activity, which would be a high volume node in volume profile world, which
Yeah.
in market auction theory means that you have, you know, the lowest offer price and the highest bid. When it meets, you get an order. And if you have a lot of these, then everybody's going to buy apples by the time they bag it. By the time the next one comes in, buys it, you're not going to walk out of that auction fast. You're going to wait to get your turn. And it's the same in here. The volume slows down price. So that's why when you look at, those pumps and emotional buys, it usually looks on the volume profile something like this. Let's say you're trading here and then it pumps, and usually this stays pretty low volume here where the explosion occurred from the balance, right? This stays the imbalance. Means that there's not a lot of interest, not a lot of volume at that level. Therefore, price moves much faster when there's no volume.
Yeah, can you just? I don't understand how that works because volume means increasing buyers and sellers, right? So why wouldn't that be where the price is driving? Because a lot of people are, using their money there.
Okay, so
So
let me give you a scenario here. Let me give you a scenario. If I am on the ask, and this is the bid, if I'm asking for oranges for $100 a pound,
Mm-hmm.
how many of you want to buy it?
Are we
Nope.
talking about the real price of the oranges?
Yeah, you want to buy it?
Yeah, no, I wouldn't want to buy them.
Okay,
Yeah, no.
I'll drop it to 99 for you. You want to buy it?
Nah, not yet.
Nowadays, probably. I'm just kidding.
Okay. How about I give it to you for $5 a pound?
Yeah, now I'll take them.
Okay. And I have a lots of supply, right? And so people meet at $5. For me to go higher, let's say to go to $7, what has to happen with the supply at the $5?
The supply has to go down.
Supply has to dry up, means the inventory has to go down, and then there's going to be a seller that's willing to sell these, maybe what are we, apples, oranges, whatever that we're selling. Maybe he's willing to sell them at 7, but that means you have to absorb all these sellers here. So the price is slowly going to go there. We're going to do an auction for at $7. Hey, who wants oranges at 7? You guys will say yes, yes, yes. Any more? Anyone else wants 7? People buy them out, and then this guy's like, okay, I don't have any more oranges. And so on. So the price, whenever you have two-sided activity, and when people agree on something, on price, you're gonna be in there. Just like Thanksgiving, the Black Friday, right? Why do people go and camp out in front of Best Buy for TVs?
because they're giving deals on everything.
Yeah, they're giving you a discount on the price, right? So when the price is below value, people go ahead and buy it. That's perceived value, right? Something is valuable as people are willing to pay it, right? Is there people buying Toyota cars for like 80K, like that are sedans. Yeah, that are just regular Ford. There's people willing to buy it because they believe the value is there. Whether the market agrees, they'll find out, within a year or two on the depreciation. Whenever you have high volume being exchanged between buyers and sellers, if there's a lot of buyers, there has to be what? Equally.
Well, if there's a lot of sellers, you said?
Yeah, I mean, for every buy, there has to be a sell. For every sell, there has to be a buy. Otherwise,
Yeah.
there's no transaction. And the more of those you have, the price is not going to do a discovery faster. It's going to stay in that range till it exhausts that area till there's no more inventory there.
Right, because
So
it's waiting for more people to like that price, basically.
But it just stays there till the inventory is emptied out. And then when the inventory is emptied at this level, right? Let's say this equilibrium. So you have the supply and the demand curve, right? This is fair price. So now if somebody lifts the price up, right? Well, demand maybe goes down, maybe the supply price goes down, shifts. So that's where the shift, happens. The more people trade in an area, the slower the price moves. And you guys see that every day. I mean, I would say, let's take a look at it here. So let's take a look at SPY. I'm just going to bring it up so that way you guys can agree and see it. Oops. All right. Let me know when you guys see it. All right. So if I look at this, how fast is price moving here?
It's
And
not
this,
moving that fast, I don't think.
yeah, it's going up slowly, going down slowly. I mean, the range is only what? $1.10 on SPY. Now pay attention to what happens here. Like they're consolidating here, right? In this little area. I'm not trying to extend it, but you guys get the point. So we're consolidating here, and you see the price is not going fast. It's going super slow drag. So it has a little consolidation in 5 minutes. If I was to grab volume profile, where do you think the volume is going to be? Is it going to be here or is it going to be here? So watch now. POC is going to be right here in the middle somewhere.
So yeah, the volume's going to be there.
So price slows down when there's volume. It adds breaks. Look, perfect volume, POC, right to it. And how much volume is on these candles here? I'm just grabbing it to here, to this high here. See this?
There's not a lot of volume.
Look, there's a lot of skinny belly, right? A majority of that volume on this run is outside the first standard deviation. Does that make sense? Does that make sense to majority on the call? Does it make sense to you?
Yep.
Yeah.
Okay.
Yep.
Okay. So the volume always slows down price. And even when we look at market profile, same thing happens there, right? Because time and volume are key components of what?
Price.
No, price is just another mechanism for price discovery, right? Don't you sell shoes?
Yes. Yep.
Okay.
Yeah.
Remember the conversation, what we talked about? If you want, what was the name of that brand that you said something?
Balenciaga.
Yep, that brand. If you put the shoes at $20, if they're, let's say, original, they're not fake, would you have a lot of customers call you?
Yeah, I would own the world.
Exactly. So for you, that's not a fair price because you probably didn't get it cheaper than that. You'd be losing money. So you need to find a price that gives you profit, but also that keeps the demand. So when we have an auction, right, to maximize profits, like we talked about last time, if you want to maximize profits, what you do is you lift the price slowly. Maybe you start at 1200, right? I don't know, right? And you get a lot of demand. The next time, you got the same quantity, same price, and you're like, I'll try 1250. Okay. Does that make sense?
Yeah, so you're gonna up it slowly till you see people aren't happy no more.
You're going to up it slowly till you see what here on this chart?
Till demand goes down.
Till the demand goes down. If the demand shifts, then you're going to say, okay, I priced them too high.
Yeah, so then I would try to lower the price a little bit.
Exactly. And that's how you would find where's your sweet spot for selling stuff. And the same thing happens in the stock market. And
So
price,
let me get this right. So if I'm thinking about this right, when you're saying this, you're talking in correlation to the market makers trying to sell at certain prices, see what people like, right?
yeah, so market makers don't necessarily sell. What do market makers do? The locals.
I have no idea if I'm being honest.
Okay. Anyone, Erica?
Facilitate the auction.
They just facilitate it. They're the middle guy. This is your people in the middle, the dealer. If you ever did
So,
drugs,
like,
you never met the drug
people,
lord, did you? You don't meet the drug lord. He has somebody else doing that for him, and he's the dealer, the local, the market maker. He finds the
okay,
buyers, and he has the people that are giving him the stuff, and any good, right? Not bringing drugs because that sticks with people in terms of example. I don't do drugs. Just to put a disclaimer there. But does that make sense?
yeah,
So
that
this
makes
person
sense.
is here
So,
just to facilitate the trade. You have the goods. I have a buyer. I'm going to take a small percentage off of this from you, right? You sell it to me for 20. I'm going to sell it for 25 here just to cover me, right? And if I can do a lot of transactions, who makes the money?
you do.
You do. So this guy's here just transactional fees. And are they happy trading in low volume areas or high volume areas?
They want to trade at high volume areas. No,
Exactly.
yeah,
Yes. Yes. I mean, think about it. You're a
yeah,
drug dealer. Do you want to sell a lot of drugs because you make $5 per every, I don't know, box of drugs you sell, or you want to sell less? You want to sell more because you're going to make $5
yeah,
per box. Me and my wife just went to a restaurant.
right.
It was, when was it? Thursday, whenever we went out. And everybody's been telling us you have to go to this Mexican restaurant. It's like exclusive. And we got there and I'm like, man, this is just hyped up bullshit. I'm like I didn't tell her this. I was just thinking in my head. The guy comes out and when I see the gratuities included in the restaurant, I know that it's bullshit restaurant.
Right, right.
Like immediately, like I didn't say anything. I accept it. I pay it. But that was one of the the clues immediately, and I'll tie back to this. But then every transaction, what would, if you're in that restaurant as a server, what would be your goal to make more money?
To have high volume in that restaurant so I can make more tips
How would you
each
treat your
person.
tables?
Flip them, get them
I would
out.
treat them good.
No,
What did you
get them
say,
out.
Chance?
Gratuities included, as fast as possible, in and out, flying through them.
Thank you
Right,
so
right,
much.
right.
That's the time piece. That's the time opportunity. Now think about volume, Chance. Same thought process. You're a server. You're guaranteed 20% whether your service is good or bad. How are
Right.
you going to make your money, more money per table?
Get them out of there. You want them out.
Yeah, but how are you going to make more money per table?
Get them to buy more.
Keep going. Tell me what would you do as a server? How would you
Yeah, you basically maybe try to sell them on a like an.
Yeah, advertise them on like the the wine specials.
Yeah,
We
get
have a
them to
chef
buy steak
special.
instead of fish.
Yeah,
Ah,
the
Right.
most amazing Mexican food in the state.
okay, well those are all good point. Exactly what he did, but his delivery was so bad. Not I added tip to him on top of it because I felt bad, but I was like, okay, well, can I have some chimichurri sauce with this? And he's like, oh, the chimichurri's $5. And I'm like, okay, that's fine. And I was like,
Right.
we'll take some plantains, and I was like, if you can just make them a little bit more crispier. He's like, that would be $1. And I'm like, what the fuck? Where did I come? Like, I'm just asking you to cook it a little bit more. Like, why is that $1 more? And my wife's like, yeah, my God, these are like, and then she started like connecting the dots. And a couple next to us, and I will laugh till I probably die on this. And it's not off topic. I'll tie back to stock market. Is the concept of volume and price. You guys nailed it. The time that he's at the restaurant, right? He needs to flip them. And I kid you not, I'll find the screenshot on menu somewhere. They have a 90-minute max seating for 2 to 4 people.
Wow. What?
I didn't know this going in, right? They didn't advertise that like or friends, right? So But then, to me, the guy next to us, he ordered lobster and this, and he goes, I guarantee you there's no chef, like a Michelin star chef in this restaurant. It's probably, unfortunately, don't get offended, like Jesus or somebody cooking in the back and working his ass off. And the guy goes, compliments to the chef. This is the best dinner I ever had.
Oh,
Me and
yeah.
my wife just flipped out of it because we know. I saw immediately what they're trying to do. I mean, they tried to charge up for everything you asked for. You asked for a fork, it's like, man, you want the plastic or metal? Metal is $1. Like everything you asked for. If you're a nice exclusive restaurant, right? You treat for experience. You don't treat for that. But this restaurant is focused on time and volume. You have 90 minutes, volume, sell as much as you can, and that you're guaranteed 20%. I saw the server twice. I saw him for the drink, for the beer, and the second time my wife got him for the wine, and I never saw him again after the food came out. Because he had like 10 tables. But 20% is guaranteed. So the time and volume, they figured, right, they're going to flip the tables faster, opportunities there, and then volume-wise, they just kept selling more. So it's the same concept as a dealer, right? His job is to sell as much as he can, especially in a bracketed market. They love it because they're buying it for, let's say, SPY is 611. They turn around and sell it at 645. They just pocket it. But think about it. These guys have very large amount of transactions. 40 cents per share on a transaction of like 150,000, 10 times a day adds up to a lot of money, guys. Lots of money gets through the dealer's hands, locals. So does that make sense now? How it slows
Yeah,
it
how do
down?
I become a market maker?
Wow, you have to be on the floor. You got to buy some seats too. Yeah, CME seats are I think about 900K now. Let me see. I think they're close to 900K now. Okay, you'll meet here. Here's your seat.
So you have to buy like your way to be a market maker?
You have to buy to be a seat on the floor. You have to be there, yeah. So you can buy it if you'd like. If you have 500K sitting around, you can buy it. Last sale was there. Let me know if you're interested. I'll hook you up. Okay. So now, like moving forward, does that add up? At least the balance, more volume is in, those areas, bracketed areas. They trade, dealers make money, they basically match people, just like we talked about drug dealer. He finds a buyer, he has a seller, he matches and he collects it and sends it, right? Same with you. You are the dealer of shoes. That brand that makes shoes, right? They sell the shoes. You buy them somewhere. I don't know. Don't say where you buy. You buy it somewhere, and then you are the dealer for the shoes. Do you make shoes? Do you make those shoes?
No, yeah, I'm the dealer. Yep.
You're the dealer. So for you, you want volume, and you want to make $30. I don't know. I'm just saying $30 for every shoe that you sell. If you could do that on large quantities, you'd be a happy man. And it's the same for dealers in the market. Okay. All right. So we'll skip this. Let's see. I'm gonna skip this, skip this, and get to this. This is a pretty good graphic. I would suggest that most of you guys understand balances, right? So when the market is in balance, that means the ranges of the days, like this right here. Let me give you a little laser. So like this here, if you guys see, that's a range high, and then you have a range low. Just because it's a range high and range low, that doesn't mean all of the values inside there, right? I typically, as you guys know, I draw my FRVP, which is a fixed volume, and we'll cover that on TradingView Live. I draw it here, and then I look for first standard deviation, which you guys are about to learn about, to know where's the value, and then where's the second standard deviation, because that doesn't carry a lot of volume. That's typically a low volume node. But here, this is a really, really good example of balance, lowercase p, right? They peaked a little bit below here, and then popped higher, came back, beautiful retest here, and then went higher. So this is an example of somebody accepting prices higher. They're not interested necessarily in trading here. They wanted to go higher. And market's giving you guys a lot of clues on Friday. Hopefully you guys caught them and why. But we'll cover that shortly. There's a big clue coming on from Friday's trading session for market update. Okay, what we're going to cover today is going to be, what is volume profile? Most of you, if you've never traded volume profile, are familiar with, I would call it event volume, like when is the volume occurring, right? And that's the bottom bars, and we'll cover that in comparison. But let's talk about it. I would say volume profile is not really an indicator, but it's just a representation of where the price traded with heavy volume or no volume. Okay. The bottom volume, I would say, when you guys look at those vertical bars on the bottom, it tells you when, right? At 10:15, we had a spike in volume. That's the difference. The volume profile tells you where, at what price, at what level did that volume occur. Does that make sense to all? It can be confusing. One is vertical, one is horizontal, but they mean totally different things. Okay, don't confuse volume profile with market profile. I also cover market profile. I'll definitely use both in conjunction to trade. Market profile is more about time, price opportunities, right? So it's how much time did price spend at a certain level. Volume is how much volume did you spend at this level. They usually are aligned, but there are also setups when they're not aligned and what that means, right? So we won't go into those, but we're going to focus on volume profile. So dependent on, right, if you have, just like we covered, if you traded a lot of volume at a specific level, you're going to have a high volume node. Hence, you spent time there and you spent volume. So on TPO, market profile is going to look like a high volume node because you're going to have periods to spend time there. On volume, because you exchanged a lot of, I would say, volume there, transactions, is just going to be a high volume node. Point of control, so we call it POC. In volume profile, this is the highest volume for the session that you're looking at. So if you're looking daily profiles, right, we're going to compare last week's and kind of talk about each week, each day. You can compare day to day. That's what day traders do, right? They look at the prior day volume, compare it to where the opening is, and then kind of make market generated information for purpose of making a plan to trade it. There's something that we call a virgin POC. Some people confuse it with volume POC, but NPOC or VPOC, naked point of control, or virgin POC is slightly different than a POC, right? If a level is untested, if that POC, let's say we auction from it and we don't come back to retest it, that's considered a virgin POC, and they carry a little bit more value. Let me give you guys an example so that way you guys can follow along. I will turn on the SVP here for a second. And let's do SPY. And I usually do 30 minutes on SVP, right? So if you guys look at this, let me just swip. I can't go back. Okay, so if you guys look at SPY, for instance, here, do you guys see any virgin POCs? It's a POC that hasn't been tested back with price action.
Yes.
Wow, there's 3 of them.
Yeah, there's a bunch of them. Right?
Yeah.
So there's this one, there's this one. Okay, then there's this one, and this one's going to be pretty powerful here, 592. And this one is right here, and I think that's it for now. Do you guys recall that the folks that have been with me for a little bit longer, how many VPOCs do we usually say, oh man, that's not good, that we're probably getting overextended? You guys remember?
I do not.
So it's between 5 to 7, right? Usually when you get between 5 and 7 VPOCs, virgin POCs, we say the market is overextended. And this, to me, we'll talk about, there's 3 type of gaps you have. Does anyone know what they are? Everybody freezes when you give them a little new question.
Did you say
Single
for
print,
3 types of gaps?
Yeah, there's 3 types of gaps.
Gap
like a single print.
down.
No, like a gap, and why do we gap, right?
When we form an imbalance.
Okay, so it's close, right? But the way I think of them, right, you have a breakaway gap when you're consolidating in an area like this. I would say, like, let's say this one. And then I think this day, actually, we did have a gap, right? You have a breakaway gap where you're consolidating, and the next day you just jump over it. You guys remember some of these? Is this a breakaway gap? You're in balance, and then you break away, go higher, right? Then you have the reacceleration gaps. That means you're in a trend, and basically the aggression of the buyers, let's say we're going higher, they're gonna just keep going, right? Because for right now, when you guys think about it, we were not necessarily in a day to day, we were not framing up. We were framing down. Now we've been framing up for, I think, mostly 8 days. 1, 2, 3, 4, 5, 6, 7, 8 days we've been framing up on SPY and ES. So that's in terms of trend. Now we are up, but we had that massive sell-off on FMOC, and this Wednesday we have another FMOC, and we're kind of at the same level. So if this was a breakaway gap, now these could be treated as reacceleration, but you're coming to a point where you got sold off from. So this right now, remember I talked about when we were trading live that there's a high chance that we're seeing some exhaustion gaps. Usually when you have 3 gaps that follow, there's usually some exhaustion. You're trying to get the people to jump in, and then what do?
What do the gaps like actually represent? Like, what do they mean when it's gapping?
So what it means that you're opening outside of the previous day's range, right? And that means when you gap that their market is out of balance.
So that's an imbalance when it's either
That's
below
or higher. Yeah,
Okay.
correct. That just means the market is not in balance, right?
So basically, it's just out of. Okay, I get it.
That means that there you had pre-established orders, and this happens a lot on earnings. I've been in my previous life in some earnings calls with C-levels. We would know that we were going to make 12 to 15% sometimes after the earnings, right? And you would be aware of that well in advance. All those calls on earnings are pre-recorded, just if you guys did not know that. They're not live when you're listening to them. Okay. So here, for instance, you had these, but they left VPOCs, which are a point of control. So if you zoom in, right, you're going to see that this is the highest volume node here for this day, right? So let me see here. I'm just going to take these off for a second. You see now the highest volume node on the volume profile is here. And high volume node just basically tells you, right, is this, a skinny belly or is it a fat belly? And I call it, a fat belly. And you see here, there's a little bit of skinny belly in between. That separates what?
The distributions.
Yeah, it's separating distribution. So it's saying if you're able to crack below 601, I would say there's a high chance you're going to go to the PDH of the prior day here and see if you're going to seek acceptance or get rejected. Okay. So this is a high volume node, low volume node, or LVN, HVN, and then in between here, for newer folks, I'm just going to bring back the value area high and value area low. This is your value area high. This is your value area low. And what that means is for this particular day, for Tuesday 21st, the value for the trading day was built inside here. And what does it mean in terms of volume? How much volume was traded here?
A lot of volume.
There's a number.
68%.
68% of volume for this day on Tuesday was traded inside this range. That
So
means
your first sigma, your first standard deviation.
That's correct. That's why we do 68% on these, right? It's right here. That means that if I was to change this to 95, right? So let's change this guy to 95. This would be my second sig for that day, right? And it should update. There it goes. So this would be the second standard deviation. And typically you can find some buyers around those levels. And you see here, they did find some of those buyers. Third sig would be all the way on the bottom, so no point in charting it. But you see kind of what they did here, and I'm not going to go into details. They dipped inside this PDH. I think we actually traded this ES, and then they reclaimed it, and then they ripped it higher, of course, gaps. Okay, so let me go back and cover this.
Quick question, Shorty,
Mhm.
because
Yep.
I'm new here. So like on TradingView, my ES chart is lagging because I don't have live data on there, but I will once I create my P500 account. But I heard you say that. Yes.
You keep breaking up for me. I hear every, like, I don't know if it's me, but you keep breaking up for me, DJ.
Oh, fuck. Yeah.
I heard you heard me say, and I just don't know past that. If somebody else is not having the issue, maybe he can ask and you guys can hear him, but I can't put it
You
together.
guys hear me now?
I hear you, yep.
Okay, cool. So essentially you can trade ES with your same SPY levels because I heard you say that
Oh yeah,
you
that's what I do. I trade SPY with the ES levels.
okay, cool. All right, thanks.
Yeah, I don't chart SPY. I mean, you guys saw me, I grabbed puts. When was it? When we reached, wasn't the 2024 value area high in the area? Yeah, I think, so let me go look. Yeah, there was a 2024 value area high, and then I kind of let you guys know that I added SPY puts here as we were approaching, right? So yeah, I added SPY puts based on this level here. Does that make sense? Yeah. So I do trade off of ES, SPY off of ES.
Yep, that makes a lot of sense. Thank you very much.
Okay. So moving forward, right, everybody's familiar with what value area high is. It's just based on the session that you're in, either a daily, could be a weekly, could be monthly, quarterly, yearly, whatever the time frame you set up your analysis on. I do daily, I do weekly, monthly, and then of course I look at the higher time frames as well. I'm aware, as you guys just saw, where the 2024 value area high is, because that's what can I expect at that level? What would you expect at a 2022 value area high?
Oh, I mean, I guess price go down.
Responsive activity.
You would have responsive activity. Basically, you would have sellers stepping in. And one way, I know this is deviating from the topic. How do you know that other time frame sellers showed up then at that level?
Excess.
Okay, well, I'm just gonna peek real quick so you guys see. It'll start connecting dots for a lot of you, right? Gonna do this. I think it's important that you guys relate these two. And then you guys can. All right, so let's take a look at the axis. Is there any axis here?
Yeah.
That's a pretty good axis. And what period did it occur?
A period.
And what do we say about those?
They usually hold through the day, I think.
78% of the time they will hold, right? And then if you guys think about it, this day gave you lots of information, and I think we traded this pretty well on Friday. Why did I circle this, for instance? It'll be the same on volume profile, I promised you. Because
it'd be like a skinny belly, so that's
so what profile does, if you look at it, it's much clearer on volume profile. What profile is this? What type of day is that?
Double distribution.
Clearly a double distribution. What that means, right? I'm giving you a hint where we're going next in the class, is that we're going to cover the date types, right? So you have a double distribution date. That's the second highest from confidence perspective. It can turn to be opposite based on how we close. And I would say this one is very close to that reversal. One, we went to 2024 value area high and you had a really good access, right? Is that bullish or bearish?
Like if you broke through or it touched it.
Well, we did not break through, right? We opened here, we closed here, so we never went above it, which is 63 level. I think we came right to
So
it.
if you touch the high, then you would expect to go down.
Yeah.
Right.
So that means when you have access at the top, that's telling you what about the auction?
We don't want to go any higher.
That means the auction is ending for now. You guys didn't want to buy those oranges at $100. Nobody offered. So what did I have to do?
Bring the price back down.
So I had to bring the price back down because we auction lower in search of what?
A buyer.
Buyer, right? And
Buyers.
we auction higher so we can find sellers, right? So right now, when you guys think about it, on a double distribution day, if you're not holding being accepted in a top distribution means just a high volume node, especially when there's a clear split of those nodes. This is the bottom section, so this is distribution 1. This is 2. I would call this upper distribution. This would be my lower distribution, right? And then I'm not going to go into the details, but there was some information on this day that we also utilize for shorting this day. Do you guys recall quickly what that was?
The spike.
Spike was at 39.25, right? That helped us make some decisions and expect. Remember, we were looking for 17 to 19 on this day. They didn't come that far. I think we were 3 points short, but we did close there. So does this make sense? So a double distribution just means it has 2 distributions. Could you have a triple and a quadruple? Yeah, but that means the market's pretty volatile and they're not really confident which way to go, especially if they're not going just up, but rather if they go, they see how they closed here and they opened in that area and they tried to build and then they went down and now they're here. If there's no acceptance here, right, then they're going to search value lower, and you can see where the next value is. It's at 1125. I would make sure that you guys are aware of this level come Sunday or Monday if you're going to trade ETH. This is going to be a huge level.
Let's say like I'm like trading, right? And I'm trading, and so what I'm looking for is if price drops below that mid area to go short, and if it comes above it, I'm looking to go long.
On the green dot, yes.
Yeah.
Yeah. A first retest here. So if you look at the candle, they're going to give you this hopefully on RTH session. It would be nice if they come here and they give us this opportunity here. And this would be potentially a short setup here. I would take that short right here.
And that's because you're accepting that distribution, right?
That's correct. It's because they're telling me here. So let's look at it real quick. Just going to delete everything. So let's take a look, right? So you have, so this is the box where they're, I would just say accept the value at one point, right? They open there, they're staying there. What is this volume okay here on the 15-minute with this breakdown? This is the candle that broke the value down. I would say, yeah, it checks out. It went above the average. They continued selling, right? They had some at 345 buying, but I'm not too concerned for that. When you look at it from perspective of other days that are in the bracket of 3 days, I would say this level here is going to be pretty important. Why that level? When you have overlapping value area highs with other points of interest, such as POC, value area lows, you want to pay attention to them, right? So for this day, I think this was Wednesday, we had value area high that was sitting here. And then you see the POC of Thursday is there. And look where they bounced. They tried to bounce here, which would mean what? Let me bring back PowerPoint because I was on the first slide. What did I say about acceptance? They have to do what here? And I gave you example right here. Where was it? I said this is the acceptance. You broke the range, you came back, retest, and you go higher. So now, what did you do here? Is this acceptance to go higher? Is this acceptance or rejection of higher prices?
Rejection.
Rejection.
This is definitely a rejection, right? There's not much to think about. This is them rejecting the higher prices. If you guys remember the penthouse, right? So we did have the penthouse, right? So if they're not being accepted there, then there's a high chance we're gonna go lower, right? So I would keep an eye here, right? The 17 level was important. The 1125, if we lose that, we're gonna take a nice little dip on ES. Okay.
So if I were to use this, should I be charting like previous day volume profile to use this?
Each one of these is a day. You see these boxes like this one here? Each one of these represents a day. This is Friday.
Yeah, I know. So I'm
Thursday.
saying like if
Well,
I'm
you
gonna
have,
trade Monday, right? Would I be trying to trade off Fridays or I trade off of Friday, Thursday? It doesn't really matter.
well, it matters because the market's telling you something here. What is market telling you right now?
That they're not accepting a higher price.
Okay, they're not accepting, but are we in the range or not?
Yes, we're in the range because they all line up.
Yeah, we're in a pretty range. And then if you do the analysis from days, so the value area high here was okay. Then you have a value area high shifting here, POC shifting, but what happens? Let me make sure this is 68 because it doesn't look like 68. Yeah. Make sure this is valid. So now if you look here, the value area high shifted higher and value area low shifted lower here. Is that correct?
Mm-hmm.
So when that happens, what is market telling you here? It's an outside value.
I don't really know what it would be telling me.
Okay, so if I tell you you're selling your shoes, this is the shoes that you're selling. This is the price range. Let's say this is 1200 and this is let's say this is 800. So if you're selling a product, and let's say from your perspective as a seller, this is 1200. Okay. The next day, something happens in those shoes that you're selling. People are willing to now sell it at willing to sell and buy at 1450, and they're also people are willing to buy and sell at, I don't know, let's just say 550. How would you treat that for your business? What is that telling you?
So people are selling low, and I could sell higher. So yeah, it's a good day.
But is it a confident auction if your value area low is also shifting lower and it's also shifting higher?
Nah, because I don't know who I'm gonna run into, I guess.
Ah, there you go. So it's not a confirmed price stability. Right?
Yeah, no one's really agreeing on it. Everyone's kind of just like, yeah, I pay this, but he's
We
paying
can
that.
go lower, we can go higher. So there's no confirmation. It just means that we're consolidating.
Just in a higher range consolidation.
Exactly. So
Right,
now
that
we
makes
just
sense.
broke that range, and it just means that we're most likely gonna find out, you know, who's truthful, right? Is it the buyers or sellers? So now I'm just gonna hide market profile. We don't need it. So if you look, for instance, this day, which was Thursday, the value area high was here at 42. Value area low was here. We actually rejected that area, and that's where we also left some single prints. They kind of start somewhere around here, right? Right there. So we are disagreeing on the value higher, but that's where the value area high is of the prior day. You always compare values to your prior day. You know, when the developing value is building, you don't really care too much, but you want to pay attention. Where is it building? Is it building in relationship inside the value of prior day? Is it building outside, higher or lower? In this case, what did they try to do? They tried to build value here. And then they failed. They went inside this value that's basically here. So now they're here. So what is the most probable outcome that we see tomorrow? What are two trade setups that you could play tomorrow?
Either we come lower and touch where they were trying to touch before, or go higher.
Be specific with levels.
All right, so we could either come back up to 6,142 or come back down to
Yeah, but how
6,000.
would you play it? That's great that it comes up, but you got to pull triggers to make money.
Right.
Okay. Pulling trigger is the hardest part, right?
Well, if it comes above that dotted line, I guess.
So let's say they give us a retest here, right? Right here, especially if they peak above and then fail, that becomes an easy short. And what do we target?
We target what? We target where the other line was before.
Yep. So your first level would be to be careful. Where would this be a level of interest for anyone right here?
Yeah, because you had some consolidation there.
Yeah. So they tried to build value lower, and if they pop out of it, we want to know, same concept. Are you going to accept the price here? If you accept, then you got to break this, and then you're going to do this. This would be a buy. This would be a sell. This would be potentially buy. I would not trust it. And I'll explain. Well, I already did explain why.
Okay.
Okay. So now, when you think about it, there's probably a high chance that we will auction here higher, especially if we lose this level. If we auction higher and lose this, 33 to 17, 16 points times $50, you guys can make some decent money here playing this, and just be patient, right? They'll most likely hit this tomorrow. If they lose this range tomorrow, right? If they lose this value, which is now a 3-day value, I'm just going to hide these SVPs. So what is this one telling you? This is just a 3-day balance. And what profile shape is this one for 3 days?
It looks like an E, maybe.
Okay. So how many distributions does it have?
3.
Okay. So he's talking about there's one here, massive one here. Why is it massive here?
Because it's so high forward.
It's because it's 68% of the volume. This is our value. And then
Okay.
you have the tiny one here. Okay. So we tried to go above this 3-day value here. What happened? Did we accept the prices or not?
No, we didn't accept it.
Okay. So now there's a high chance that you're probably going to test the bottom to see. And is this a strong low or a weak low?
I think it's a strong.
Anyone else?
Weak.
It's a trick
It's a
question.
long one.
Weak and crowded.
It's weak.
Why is it weak?
It's crowded.
Not much
no
volume
action.
down there.
Okay. What about, let me explain it this way. I'm just going to turn TPO for a second. Come on. Okay, here we go. High candles for a moment. What if I merge these profiles? Let's just say I merge these three. So you had access here, you had access here. Is this access going to be pretty massive here?
No,
No. What was it going to be?
or low.
Poor low, because you tap the same level twice and you're not able to go through it and you bounce from it. Therefore, this becomes a poor low. A poor low, think of it, how would I explain it? I think Drew did a good job one time explaining this. So if you have a price action that's coming to this level twice and not able to break lower, it's pretty much weakening this demand here of buyers, right? They bought it once, we went higher. We bought a second time, we went higher, right? They did make higher highs here, but did they hold those higher highs?
Yeah, I was just about to say that.
Yeah.
Yeah,
So
I
I
remember.
think exactly. I think that's a perfect analogy. I knew you had one, man. I knew it. I knew you had one. You're too smart.
Shorty, can you show us how you merge those profiles when you get a chance, please?
Yeah. So if you guys right click on it, there's a little feature. Gonna change actually next week on trading view. So let it unmerge. So if you right click on it and say merge with previous profile, it's going to merge this day with this day. I just was impatient and then I already clicked merge this one with this one. Since this one's already trading views processing this for 5 minutes, they're going to merge these two now. Hopefully today. So basically, it just combines the TPOs with this day, and then you go on and do weeklies, whatever days you want.
So it'll only do the first two?
Well, that's what I did, yeah. Or I can select merge this one, and then it's going to merge into a 3-day. It's just something's happening. It's still processing here. I don't know why.
Okay, all right. Thank you.
Yeah. I don't know, maybe if I hide candles, they have some issues with this functionality. But yeah, it'll just merge, and then you see that like Drew explained, you keep banging on the doors. Eventually, you're gonna break it. The door's gonna be collapsed. Okay, does that make sense? So far, what we've covered, right? We covered basics, right? The point of control, which is the highest volume traded, the value area high, the value area low, profile low and high. That's just your high of the day, low of the day. Nothing crazy there. And then the value area high, like I explained, covers 68% of the volume traded, right? The outside is what? If this is 68, what is the outside?
$95 and $99.
32.
Well, it would be 13.6 on the upside, 13.6 on the bottom side, right? That would be what, 26, 27.2. So now when you look at it, it's kind of like this, right? So you have the 13.6 as a second standard deviation here, and then your final third deviation comes up here. So when you're charting, right, on volume profile, and you guys saw me just change it, right? When I do that, right, I look at and emerged finally here. So you see how it looks now. So you guys saw me change this on SVP here, right? I double clicked here and I was able to change value area, right? So if I go here, it's 68% is the first standard deviation, right? Well, then if you add 13.6 plus the 68, what do you get?
$68.
Well, 68 plus 27.2
100%.
it would be 95. We'll work on
Oh.
math skills. So 95 would be the second standard deviation, which represents in terms of value, it would be somewhere around here, right? This would be your, I'm trying to do a good job here, but you see this, I'm trying to give you what it looks like. This is your second standard deviation, and the third one is like here and here, right?
Shorty, what time frame, or more so like how many days, like weeklies? I know like weekly and monthly second sigs are good. How many days of a balance would you potentially mark it out? Like,
as long as they're balancing more than a day. If they, for instance, here, this was a 2-day balance here. At one point, this was a 2-day balance here. And you see how they responded. I mean, it kind of too good to be true, I would say, right?
So would you mark out the second sig though for that 2-day balance potentially?
Yeah, of course. So if I do this, if I explain it, there's a second sig, and you can expect sellers there. So let's see.
That applies to the third sig too, right? Just mark them both.
Yeah. So what I do, as you guys know, and it's already preset for me, this would be my second sig, and I would change this to 99. This will be my third sig, and this becomes the range where I want to sell in balances. This is our selling range on here. And look what, oops, can you guys see? I did something to my monitor. Does that make sense? So this would be my second, and this would be my third sig here. And this is where I'm looking to sell. They got in, lower highs, then they created this, then they didn't like that area and they sold off. And look where they bounced. Are you surprised where they bounced?
No, because that's the fairest price.
This is the fairest price. You're expecting that, right? So this will be where your buyers show up, and I call it cumulative POC. That's what CPOC stands for. So I would mark that, and then of course I would mark the bottom. I just didn't do it right now, but yeah. Does that make sense, Chance?
Did you go over cumulative POC already?
Yeah, perfectly.
Yeah, so cumulative POC is just 2 days or more where you draw FVP. And if you want to draw FVP, if you click on this menu and you go here, there's something called fixed range volume profile. And that's what I use. I just favorite it. If you click the little star right here, You see how it puts it here, and I just put that. I use it a lot, right? I use fixed range volume profile a lot. So I favorite it and I click it and I can focus on one area, right? I can focus on, if I want to know what this distribution was here, right? I can, with this tool, I'm able to kind of look at just this price action and just make sure your extend right is not checked. So that way it doesn't look from here all the way to the end. I just want to know, in this area here, like where is it? And I don't want this blue candle here at all. And I don't want this one. So I just want to know for this consolidation, where's the value? Why would this be useful?
So you can know the tops and bottoms and the fair price of that area.
Okay, well, let me give you this scenario here for Friday, right? At 9:45, we didn't have this right here, right? We didn't know where the value area high was at this point. We did know something TPO, but we won't go into that. There was access left on this candle here. And then you see, right, we never really encroached all the way to the value area high, which is probably indicating exhaustion a little bit on buying because they met some sellers here, right? Then you see the value area low, which you did have, was being set up here. I would say just put 1 sig here on the bottom. So this is the value, and that also happens to be our consolidation, right, zone on this. So when they crack that, now what are we searching for? What is market trying to search for?
Value.
Trying to find value, but we knew that 2 days we're consolidating, and you said it perfectly. Where are you going to go when you have the value? Here, let me see, why is the value area low not showing up? Oh, it's picking up somewhere in the bottom. Yep. So now, tomorrow, let's say they lose 128. What is the chance that we go to 12.11?
Very high.
Very, very high that we're going to do that, guys. So, in the bigger picture, how I would trade this tomorrow is that this is a bracket now. This is our bracketed market, and you can look at it, right? You see that there's first sig is here. I think this might be second sig, whatever. Sure. Yeah, that's definitely second sig. So the first sig would be here, and I would look to see if they get up above here and fail, that would be a really good setup for the short. So I would look for something like this. Give me this, and then we would target. Where would be the points of interest that you want to take some money off if you're playing multiple contracts or whatever you're doing? Would be that you're looking for short here and your stop loss, manage it above it. And this should be your short entry. Your first profit should be around this area here. And then your final target would be around here. And then of course, if you see a lot of weakness, right, that we are not getting a bounce here. If you're not getting any sort of bounce at this level right here, what would you think is going to happen then?
You visit 112.
Yeah, most likely you visit this 112. And remember, all these gaps sooner or later get filled. And you have a gap that goes all the way to about 93. And then, we had really poor structure, and we'll talk about that shortly. Last week, just because we had so many gaps, they just kept gapping over stuff, right? So, I mean, look at this right here. So I'll draw FVP from the bottom to the top and look at the structure. Does this look pretty good?
No.
I'm willing to offer anyone who wants to bet whatever amount you want to bet that we're going to auction to this level here shortly. I'll take any bets.
Are gaps treated the same as single prints?
Not necessarily. No. Single prints during the cash session, the RTH regular time hours are for me more important, right? Because that means the volume during the cash session was there. There can be a lot of traps when you have volume gaps, before. When you open higher than where you closed, that can be premeditated where they can set up a lot of traps. Like I mentioned, exhaustion gap is what I think is happening here. And that's why I'm pretty confident we're going to be here in no time. And
Is
that's
there
really
a specific way to see gaps? Or like to treat them?
Say it again.
Is there a specific way to treat gaps?
Yeah. I mean, so the rule that I have, if we have a gap, let's say we had a gap here. So if we had a gap SVP here, I'll turn it on so you guys can see it. Come on. So let's see, we had a gap here. The rule that I play with, if that gap, let's say, gets closed within the first hour, if they encroach the low and they start, there's a high chance you're going to close it, which would be your initial balance, right? Which that's why I pay attention to the C period a lot. If you have a gap, I usually pay attention to that.
Okay, so if they get inside the gap within the initial balance, then they'll likely fill it.
I would say 90% of the time it's going to be filled.
Gotcha. Thanks.
Yeah, so I play that quite a bit. I hate playing gaps, as you guys know. I tell you guys that every day because, I mean, here we gapped and look at the range that we had. On SPY, yeah, $2.55. And this alone tells you, which brings me back, we're going to start talking about value and the date types. When the value is narrow, what does that mean? Narrow mean tight, like this one.
Gonna be a
Say it again.
gonna be a boring day to trade.
Yeah, but it tells you more, right? So the market generated information such as that one is very important. What does it tell you?
You'll likely break out of it during the day.
Likely, yeah, there's a high chance that you're going to break out of it. But what does it tell you about the auction facilitation?
Means the long-term
Is it
participants aren't there
exhaustion?
yet.
Say it again.
The long-term participants aren't there yet. Mostly
they're
short-term
not.
traders.
So in control would be the short-term traders. And why do you want to know that?
Because we'll probably stay in balance, but at some point, most likely long-term traders will show up and will break out.
Okay, thank you. That's very good. So usually in a tight value area, the short term is in control. I would say 95% of the volume that day is short term. Then you have, the next day they expanded the value quite a bit, right? I think I'm still on the wrong. It's even tighter than that. Let's just shift here. Why is it so slow? You see, God, this value on SPY is just like pretty bad. 94 cents. Like you went below, you didn't like it. You went above, and now we brought you back inside. Right? So whenever you have a tight value area, means the poor facilitation, right? So think about, whoever's selling shoes, Danny, right? When you're selling shoes, if your price that you can lift and buy is $30 a part, would you stay in the business?
Repeat that again. I'm sorry.
If you can buy the shoes at 1200 and the max you can sell them is for 1230, would you be in the business?
It depends on the volume.
What about shipping costs?
Yeah, nah, I wouldn't be in business that long.
Okay, you won't be in the business that long, right? Because typically when the value area is tight, the price discovery is telling you nobody's willing to bid higher or lower, right? So therefore, eventually that out of a value that's tight, you're going to get a massive pop, right? And I would say we did get a nice pop to the upside. Now we're just back in a 3-day balance. Okay. Does everybody understand the SIGs? Does everybody understand how to draw and on a multi-bracket, more than 2 days of consolidation, how to draw them? This applies to weeklies, monthlies. I can go on like forever, right? So if I look at this, I'm just going to turn on PVP. Right now, I happen to be on a monthly. I'm just going to look at this on 3 months, which would be the quarterly at this point, right? So let's take a look at that so you guys understand. It's applicable to all time frames, right? So let me.
I get confused on what time frames to use. Like, so the 3 month you use the 8 hour.
I usually do daily on that. So yeah.
Okay.
So here's your 3 months, right? So if you look at it, this auction did not look like it completed properly here, right? Which kind of tells you here as well. So now this is the value of the 3 months. Right, we still don't have a full month completed, but what could you expect from the price action? I'm not trying to predict, I'm just preparing what could happen. If this is my 3 let's say this is my, I just want to delete this, sorry. This is my last quarter value area high is 6.4. So this would be 2024 Q4. If we reject this level, what is the market telling you?
It's not accepting prices higher, and it can possibly visit the opposite extreme.
Okay, so now let's say I could draw, from here to here, and I could see where these SIGs are as well. I could see where are they coming up. So the first value, including January, is coming up to 601.31. So this range of 604 to 601, you can expect to find buyers potentially. If they fail in this zone, what do you think we see?
That
Value
POC
area
and
low.
the value area low.
It would be something like this. Does this happen in a day?
No.
No.
Usually not.
So the odds are, right, there's something called reversion to the mean. What is the mean in this case?
The POC, no?
Yeah, of course. I was just checking that everybody's following, right? So this is the POC, right? I just explained this right here. Hopefully a lot of you guys took that class in high school. This is your mean, and then when you step away from standard deviation, like your second and third, there's a setup that's called reversion to the mean, and I use that only in bracketed markets. And we use it in a trend when we lose that value area highs, then there's an 80% rule that'll go over. But the fixed profiles, I use them when you have 2 or more days consolidating, or in this case, it could be maybe 4 months of consolidating, right? And you see here between quarters, right? We're not, we were not consolidating. Value area high shifted, value area high shifted. From 3 month standpoint right now, is there any weakness that you see in the market? As of right now, as a long-term person, do you see weakness here?
No.
Okay. If you're extremely bullish, what would you like to see? Where would you like to see the price being built now?
Above the new high.
Yeah, we want to see it being built at least build value above this. Because that would mean, again, I'm just going to bring up till you guys start screaming that you get it. That means that we are accepting the value. As long as you hold that value area high, that means that we found net new buyers, right? It's not old business. Old business would mean what? It was just a short cover rally, right? Somebody was just trying to basically buy. We had late sellers at a bad location, right? When you facilitate a trade or initiate a trade, let's say people that got short here, let's say at this level, but they're probably crying, right? I mean, they reclaimed that level, and what they do, they went to basically opposite. Now we peaked above it, and now the question is, do you sell here or you buy here?
Buy there.
Either I'm doing a bad job somewhere, or who likes to buy something above value? You like to buy something above value?
No.
No. I was thinking because it's breaking through the new high.
So think of it differently. You're selling shoes. You bought shoes at $570.
Uh-huh.
And for past 3 months, the value of those shoes been between 604 and 578. Now you have an opportunity to sell it at 6.
Market sell all full lot.
You want to get rid of your inventory here.
Gotcha.
Do you guys know how these candles came that you guys use? Do you guys know who invented this?
No idea whatsoever.
Does anyone?
I know it was like candlestick patterns and like trend lines and triangles and stuff was like witchcraft when it came out. Like people didn't believe in it for a while. That's all I kind of know.
Does anyone know?
It's the Japanese.
Keep going.
The Japanese rice traders, I think.
That's correct. In 18th century, there was a guy that basically used candlesticks, right, to track the rice market in 18th century. And he was pretty good with that. I'll send you guys a story on it if you guys are interested to read it. But the concept is, right, he was able to figure this out, like market supply and demand based on candlesticks and plotting of those. So he knows if he has bad harvest of rice, where can he expect buyers? Where can he expect sellers? Where to manage inventory? And same with you with shoes. You do not want to buy above value. You want to sell above value. And
I get that, but this is where I get confused because I understand what you're saying. Can you go back to the chart real quick so I could explain why I thought that? Because every time we break above the new high, we end up going higher. So my thought process behind, why you'd want to buy there is because we're going to go higher if we break a new high.
What is your reward?
Reward?
Well, I mean,
Like,
if you're buying here, you gotta sell your shoes. You pay
Yeah.
604 for shoes. Where do you gotta sell it to make money?
higher, yeah.
You gotta sell it higher. And how much higher have we been? How do you know the acceptance of price higher? Do we have any record higher? If the
No,
price
we
was
don't.
acceptable
Nah,
rejection?
there's no indication that we'd like it.
So are you trading patterns or are you trading feelings?
That would mean I'd be trading feelings.
That's correct, yeah.
Yeah.
So this is an opportunity to sell, especially if you lose this 604, 601. I would say somewhere around this on SPY. It becomes a pretty big sell opportunity, right? To target 587, then ultimately this POC here, and I'm pretty sure this POC is gonna shift from here. Pretty certain that I would say we can see SPY to 598 by Tuesday of this week.
Is this why you took those puts?
That's correct. You're on something, right? Yes, that's why I added SPY puts here.
Gotcha.
I wanted to sell SPY 0DT calls, but I missed the train on that. Because if I sold the calls here above value, especially on market profile, it was clear as day. When this happened right here, if you sold the calls here for SPY, man, think about it. 610, you could have sold 611, 612 calls. And well, how would you manage that? If I sold the calls here, I would just buy them back. Probably at 100% discount here. You guys agree? The market profile was pretty much giving you that information, I would say, on Friday. But I did buy puts. I didn't sell the calls. I should have sold the calls too. Double dipped, but I missed it.
Shorty,
Yes, sir.
quick question about that. What's the difference between selling calls and buying puts when you play options?
Both are bearish.
Right.
So when I'm buying puts, right, I'm leaning more bearish. And if I'm selling calls, I'm saying that price action is not going to go higher. In terms of, I think it's just that you get a credit, right? And one is a debit, and then the difference in how the profit's recognized. When you sell a call, you're given a credit. Let's say, I don't know what the prices were. Let's say 512 call, or let's say 11. Let's say 11 call. This one at this time was trading, I don't know if anyone has it up. What was that? I don't know, the week. 612 call or 611 call was trading at, let's say, 55 cents. Well, if I sold, let's say 5x here, that would be how much money for me? I would get $705 credit. And then as the price goes lower, what happens to this call?
Loses value.
So it will be like 0.08 cents. So my profit would be what? It would be 0.47 per contract times 5, right? And that's how much would be your profit, which would be what, $235? Your max is 275. You closed it for 235. Does that make sense? If I bought the puts, is this a credit or a debit? It would be debit. Like I paid, I don't know how much I paid. I got January 31st, 600 puts, right? And don't quote me, I don't know, 112. And I got 10x here, so I paid, you know, dollars here for this. There's no credit involved. And how do I make money on this is if this put now goes to 250 minus 12 minus commission, right? Everybody got paid the dealer. Is my profit. Does that make sense? The difference.
Yes.
One is credit,
you.
gives a credit, then you close it, and one is debit, you pay up front.
Thank you.
Mhm. All right, quick lesson on options. So just to reiterate, whenever you're in a bracket, right, you're not looking to buy at above value area high. You're looking for responsive activity. You're looking to sell when something's above value, especially on a 3-month value. And that's why I was in the puts. If you're buying above, is that expected or not? Danny, I want you to print this. Buying above value is unexpected. So when you look at ES, right, especially on that 3 months or whatever we had, PVP, let's go to daily. When you go above it, that behavior is not expected, right? So therefore, you're looking, not trying to go with unprobable, you're trying to go with the probable, right? So here you're looking to sell, and you're not, and below you're looking to buy. Please make sure you guys, I suggest a lot of people that are new that you understand this, print it out. If you're on YouTube, you know, and you're not in Discord, take a screenshot of it and make sure you understand it pretty well. Okay. All right. Let's go on to the next
Quick
topic.
question.
Mhm.
Quick. For SPY, you went 3 months out for that for the particular reason of that they were trading within that range, or you usually go 3 months out?
I typically, so when I use PVP, my standard profiles are the following, right? So I use 3 months, right? And if I see it's a 2-month bracket, I can just change it to 2 months. But I usually use fixed volume profile to gather that 2 months consolidations. Naturally, I look at 1, I'll look at 3 months, I will look at half year, right? And then I'll look at 12 months. Those are the timeframes that I use PVP for. And PVP is your periodic volume profile. It means you can preset, do you want hours, days, you know, if I want the first 1 hour profile here, I can do that, right? I can just put, give me an hour, and it's gonna give us an hour here, right? So probably use 30 or less minutes here. So here's your hourly profile, right? You're consolidating, higher value area low shifted. This looks good, but then it doesn't look very good. And then of course they broke lower, right? And now you see here as well, same concept. Every hour I'm able to see where's the value shifting. And on SVP, right, when you do SVP, just somebody, if you care to know, there's a feature that's called developing value. So you see this? You see this dotted line? You see how developing value here, we peaked above it, and they gave you a signal here, what? Same signal that they, I guess, gave you here. What did they give you?
Rejecting the high.
Yeah, they're not interested in value, and they tried to bounce, and what happened? It wasn't a discount. It was not enough, you know, there to bounce. So they're searching, you know, they're selling off to do what?
Find value.
At the buyers.
Yeah, we want to find the buyers, right? We auction higher to stop the buying. We auction lower to stop what?
Stop the selling.
Stop the selling, right? And you guys have to click this. It has to be pretty fast in your brain when you're trading because you have to see it, right? Live. It's much easier to trade now and explain it, but you have to be able to recognize this at the time, right? You know, could you trade SPY tomorrow? Let's say if they give us a potentially a good re-entry like we talked about against some longer data puts like 3-4 weeks. Yeah, certainly you could do that. But I was able to remember time, price, opportunity. I saw an opportunity and I captured it at pretty high prices, right? I only use when I chart monthly SIGs. I use, you know, current month. I can include it as long as the price action is within that range of the prior month. Okay.
Short. Oh, sorry.
Yep. Go ahead, Dave.
So when I first started, I would just trade as soon as price touched previous day value or high. I was shorting, like as soon as I would just wait for it to touch it, and I was going short. Then realizing obviously that doesn't. I need to be a little bit more. I don't know. I was missing some points, so now I'm hearing second sig, which I'm starting to put on my charts. Do you play second sig first tap, or are you looking for a level there and footprints and all that, or is it?
My mentor told me this, and you should probably engrave it in your head. It's better to be a little late than a little early. Can you make something out of that?
I've pretty much traded the opposite, and I'm starting to change that.
Yeah, it's
yeah,
much better to be a little late than a little early, right?
Yeah.
I didn't get, you know, when we came to 61.6, I didn't get SPY puts there. Mine were more like around here, and I can find when I comment. I don't know when I did it, but it was somewhere around here. They came back, and I was like, oh man, you know, I'm not going to go into details. We have a gravestone doji, candle formation, and then you had a massive sell-off. We were actually short around here for ES. So we sold off and then one proceeded lower. So it's always better if, for instance, let's say, I don't know, tomorrow, right? Remember, we have these single prints here. My ideal scenario to take this short would be what? What's the best setup we can have here?
Maybe a look above and fail, and then retest it from the bottom.
Man, they give you a look above. You might not even get a test here. They look above and they fail. Man, they're just gonna execute it. So this would be a A+ for me.
Okay, and if they don't give a retest, then you're just looking for a short entry.
Well, then you got to time it a little bit better because what happens if you're getting a short here versus here? What happens to you? What does that mean for you?
Well, it's definitely worse trade location, and
your risk to reward gets smaller, right? So you're playing against the odds at this point. I'd rather short here than here.
So you'll short the break coming back through.
I'll short the break coming back through. That's correct. I mean,
okay.
How do you know whether to wait for a retest or just take it on the break?
You have to see the confidence in the morning auction, right? Remember the other day when we were trading, I said, man, they're just lazy. They're not moving anything. The orders are not hitting. The auction was not very confident going higher or lower. They would come, and then if I see in the morning, right, that they, let's say you're making higher highs immediately, and they give you this and it's still making higher lows, maybe they won't. But if they lose this level, what do you need to lose a distribution? What needs to happen? Who needs to step in?
Other time frame buyers and volume.
Yeah, you need volume. You're gonna see the volume step in. You're gonna see some orders on footprints, right? And they're gonna confirm, like, hey, we're here. And remember when I said, what day was it when we talked about when I said, man, and I think Burnside was also pointing out the same. When we said, man, there are some massive orders on Thursday. Do you guys remember that?
Mm-hmm.
Like, look at the volume here, guys. I mean, I'm on 5-minute candle, but look at this Thursday volume here. I mean, that's a lot of volume here, right? And a lot of it came also after hours. I think it came like at, I think it was like 4:15, like right at the close. Does that make sense? So I looked to see where the orders are, and it was at 48.50. That was a massive, massive like delta orders were coming in. And remember, I was trading live Friday. I said this looks like a sell coming. You know, they were not able to hold that level. They would come, they would bounce, but the bounce did not yield like a huge auction higher. And how many times did we bounce from here and make a higher high from 48.50? Here's, I'll just go 50 to here, and let's say 40. How many times on 5 minutes did we make higher high?
None.
None. I mean, you made a lower low, right? You made a higher high, you made lower low, lower high. You put in, you want to call this lower low, then you made a higher low, and then you're basically consolidating, right? But then they broke the bottom, which was, you know, probably an increase in volume. And that level that we had, 48 to 50 with massive delta in orders, could be that it was what? I mean, they are. It was at bid. They were sold at bid after hours. Somebody said earlier, Chance, what would you do when you're selling after, you know, what do you want to do? You want to sell it as quickly as you can. You want to get rid of the inventory. So that's kind of what they did.
Shorty, one more quick question. We talked a little bit about A period excess. What period can you confirm that that's excess by?
B period.
Okay.
Your next period immediately told you that there was access, right? So I'll just bring it up. And then we'll focus back on the days on the chart. So let me go break this down so you can see it. So here's your TPO, right? Here's your A period, right? You opened here, you auctioned higher, then the B period came in and basically stopped at 59.5, which makes this to be what?
Excess high.
Yeah, this is our excess high.
Okay.
Right.
So after B period, you're expecting that that's holding and you're taking that into account.
That's correct. Yeah, that was a big portion of the retest short on SPY puts.
Right. Okay.
Because if I grab this to here, if I grab, let me hide this for a moment. If I grab from this candle to this candle, where's the POC on volume?
Probably somewhere in the middle there.
Watch.
Maybe there, yeah.
Let me not include. I don't want to include these candles here. And this candle does not need to be there. Okay. So now if you look at it, volume is right at 53. The value area high of this opening drive is where?
Mm-hmm. Jeez. Yeah. Okay.
They came perfectly to it. And
so that's a play you can use if you just volume profile out. I know some guys fib A period. And then
yeah,
you're
you
looking
can
at that's a
definitely.
potential.
Yeah, you can definitely fib this, right? I mean, here, think about this, between 9:45 and 10:35, they gave you on the high and the low, right?
Mhm.
This is your outside. I would, you know, some people call it outside liquidity or external, and everything inside this would be your inside liquidity grabs. Like here, you have a, you know, equal highs, I would say. I'm throwing a lot of terms that you guys might not follow, but this would be equal high. I'm hitting, and then eventually I break. So now they're looking to see, hey, can I grab the liquidity? And here you see they also had equal, they also had equal highs here, but they did not take that liquidity, right? So if you can't take that liquidity, where are you going to seek liquidity then? Knowing the fact that you rejected the value area high and you have access, what is the market telling you now?
Much lower.
Much lower. So that's the information that actually was generated at the time when I took the short. And that's how you have to think. What is market telling you? And market's giving you information. You just have to read it. And I guess my point is to teach you guys how to read it. Okay. So what could you have done fibs wise is a quick lesson is you grab this high to this low, high to low, and then change it to retracements. And let's see what it hits. This will be our what? Golden pocket, right? And this would be your short opportunity. on SPY or ES, sorry. Does that make sense?
Yeah.
And if I wanted to find this with fibs, right, it's easy as well. I could grab the same swing high, swing low. Because remember, market's about, symmetry. So if I go extensions, look, they came in to 127, they had a small bounce. They came to 1618 here, had a bounce. They went below it, and what did they do? They rejected it. So you could have used fibs. You could have used many things for confluence, right? On that, but for me, it was how they built it, the access high that was created, the value area high, I'm sorry, for 2024. You're coming up to some big levels and then understanding how did you get to this level? Remember, I told you guys there was a potential of exhaustion coming in. 1, 2, 3 gaps that you had. The buyers are getting tired. And remember, this FMOC day here, the sell-off, this was, remember we talked about this. You guys remember how I explained the middle line here? And I also talked about the sell-off POC here. Does anyone remember? Like it was like 30-ish. You guys recall this from the watch list? Okay, maybe not.
I remember you mentioning it, but
No.
I don't.
That's what I called it before. It was December POC, sell-off POC. So if you look now, if you lose this value here, then you don't have to just think about it, right? If I can't agree on this price right here, where do you think I'm gonna go? Well, I didn't create a whole lot of value here on this run, obviously. You can definitely go to the bottom here, which would make sense. It would make sense on so many reasons, right? If I go here, what is this? It's another value where they created it before. It's probably a little bit lower, but like this. Right, so if they're not happy trading here, they'll retest. They fail here, we're gonna go to the bottom, and so on, right? And then you get a little tricky here on higher time frames, I would say. Does that make sense?
Yeah, thank you.
All right, so let's go back to this. I think we're making decent progress. And I'm trying to combine as I'm teaching. Do you guys see it? So if you guys want me to go quicker, I certainly can. I can finish this in about 10 minutes.
No, it's perfect.
Take your time.
Let's see, so we covered this, right? For people on Discord, you guys have this tutorial here. If you go in presentation mode here and you click on this video, it's gonna play and you guys can watch step by step on drawing SIGs and what it means. So you guys can definitely watch this, but make sure you're, I guess, in presentation mode. I don't know how to enable it otherwise. So this is basically covering that piece. And then here's a better visual of what I just covered on standard deviations when you're trading the bracketed market, along with the explanation of what that means here with the bell curve. I rotated, my technical skills got better, and I was able to flip that, and you guys see that, how I'm trying to put that first mean, first SIG, second SIG, third SIG. Remember, this is just for bracketed markets. Okay, so far, what did we cover? We covered the basics of volume profile, the POC, the value area highs, range high, range low. We covered when you have a multi-day, which is your bracket, when you're overlapping ranges or values, and how to draw the FVP, and understanding the first, second, and third SIG and reversion to the mean. And typically, as I explained, if you fail at the top, most likely you're going to auction to the value area low, sometimes below it, to see, right, if the buyers are going to like it at that price. If you dip below something that's value area low and you reclaim it, don't be short, right? That's what happened, right, not too long ago when we ran it from the bottom to the top now. So far, any questions what we've covered? And we included some other information, I would say, but that's based off questions. Is everybody progressing and following so far?
Yep.
Oh yeah.
If you're new and this sounds like some different language, let it sink in. Go through the PowerPoint when I posted it in the Discord. Open it, but you have to put time in it. I can't put time in it for you. You have to look at it, read it, ask me questions. You're not going to get anything out of one session and then become a trader. It's not how it works. You don't become a doctor by doing one surgery and then you call the next guy, hey, let me do your surgery. Right? It's a lot of practice, a lot of learning, and then you apply it, kind of learn before you earn, not jump him with both your feet, man. Shorty said he's short at the value area highs on first step. Shorty never said that. Right? You want to see weakness. You want to see them ideally peak above, reject that area, and then you can be short. Be late than early in trading. Don't flip that formula.
Hi, Shorty. Thank you so much for your time. Can you hear me okay?
Yeah, I hear you well. I hear you loud and clear.
I'm a fairly new member, and if you can, I know you're really busy. If you could take a look at your Discord messages, I set my TradingView ID for the integration that's offered. So
Yeah, I gave
thank
them
you so
to you, so
much.
you just have to refresh it. Like, are you using an app or a browser when you're opening TradingView?
During this session, I installed the app, and
just
I have been using the browser, so I'm using both.
Okay, on the browser, just refresh it, and then under indicators, you'll see something called invite only, like I'm sharing on my screen.
Okay.
And you'll see them there. So you
Thank
can check
you.
during the call and just put in the main chat, and I'll respond to you. You should have
Thank
it.
you so much.
You're
Thank
welcome.
you.
All right, so let's go back to volume profile. Hopefully, we're making. Somebody has a question.
Yes, I do have a question. I actually have a couple of questions. First of all, for volume profile, do you use regular time or ETH? Because I get confused about
On monthly profiles, on larger time frames, I like to use ETH. On day to day, I judge it based on the bottom volume. If I see that we had lots of volume and we made moves, then I can include ETH. It does not hurt. Typically, it's not a big difference, I would say, but I use ETH for volume profile.
Okay. And then how did you get the level, that 2024 value area high? I'm trying to draw it on mine and I don't get the same level.
So if you go to your PVP, if you go here and change it to 12 months.
Yeah.
And make sure you're on EH contract.
Okay. Okay.
And I think you're on a continuous contract.
I was on the continuous contract, so I wasn't getting that.
There you go. You see where this one, I'm not trying to cheat, but it looks like it was to a penny. Well, close to a penny. Yep.
Okay. All right. Thank you so much. I appreciate it.
You're welcome.
Shorty, can you repeat what you said about the day-to-day on using ETH or RTH for?
So if I look at this, right, if I see, for instance, on Thursday was a pretty low day, right, on volume. Here's your volume for Thursday. Do you see this? Let me find, where's my little thing? I'm trying to mark this day here. That's a pretty low volume for that day, and I think it goes back to like you can't include this day here, but it goes back to like one of the lower days in volume for a while on ES and SPY. So if I see that it's a low volume day, what are the odds that those volume nodes are massive enough to hold any price action?
Probably not very strong.
Exactly. That I just relate it to see how is it compared to the relative volume around it. And if I see that it's super low, right, I can use ETH on it, right, on extend it on 30 minutes for day to day in here. So if I mark this value area here now, value area low would be here. I'm just gonna.
Oh, so because during like the market session hours, it's lower volume, you're gonna want ETH to have more volume.
Exactly. Just see if it changes it, right? That's the logic behind that I use. That's nothing more to it.
Makes sense.
It's more of an art, I would say, than science, right? I wouldn't make an absolute statement around it.
Gotcha.
It's so, and look, this is your variance between the two. This is our, I would say this was our ETH and this is our RTH volume. So would I fight over this, points wise? No, I'll close it at the first one. I'll be okay there. Does that make sense? It becomes really a 2-point zone.
Yeah. Thank you.
All right, so value area tips and tricks. So everybody understands what value means. That means 68% of volume traded there, right? And there are certain rules and tips that you guys need to. I'm not going to go through this because I'm going to cover it on the next slides. But I would say that all of these points that are here would be beneficial for you guys to understand. If the stock price opens above the value area and then falls back inside the value, this is a strong bear signal. Can you guys visualize that, how that looks?
Peak above and fail.
That's a peak above and fail. And in terms of, you know, the way it would look like on a chart, right, is I'm just going to hide this and I'll give you a box. So let's say this is our prior day value right here at the top. And let's say we open somewhere here. And this is where we open, right? And this is a prior day high. I will just do this. This is our PDH. This is where we open, and this is our value, right? Value area high, value area low. In that case, you open above it. And I'm not used to this being on the bottom. Sorry, I keep searching for it. So we opened here, which is above value area high, and then you lose this. This is what? What is market telling you?
You're rejecting that price.
Yeah, you're rejecting this price, and there's a high chance you're going to go to this POC, and then ultimately you're going to play out the 80% rule, which would say 80% of the time when you fail to hold the value where you peaked above, there's a high chance you're going to go here to the bottom value area low, PD value area low. Make sense? So that would be the first point. Then if the stock opens below the value, this is just the opposite. And continues, this one is more, you know, this is more of a trend continuation, right? If you open above something and you continue, then there, you know, that's acceptance. That means, you know, the gap or whatever we had is validated, and most likely we proceed higher. This is important to know. Did we ever use this bullet here? Did we ever use this to define how old the trend is or how strong the trend is? Can you use this bullet?
Every day.
I mean, every day you can definitely use it, right? So if you look here, and if I look at this, so what we could say about the trend right here is you went lower, then you overlapped higher, right? That's good. Then you gapped, then you consolidated, then you gapped, then you shifted the value higher, higher, and now you're consolidating. Now you're overlapping, right? So is there a clear trend? So when we were running here, I think there was at one point when we were running, we were just shifting value higher and higher. I don't know where, I can't go that far. But usually you want to see a stack on value and minimal overlap, right? If this is our value here, you know, you want to see them moving and you want to see it looking like this, right? Is there a chance that after 3-4 days that we're going to slow down, consolidate, and continue? Yeah. But when you see something like this, right, this doesn't look necessarily right. You higher gap, consolidate, gap, consolidate, gap. And, you know, these consolidations that happen were on really low, narrow value areas too, indicating that long-term participants are not really here. But we did find them at the top, which is why I was giving you guys warning. So whenever you're looking for value and you're looking to see how healthy the trend is, you can do it by looking at longer time frames as well. If I go to the weeklies, right? I'm just trying to explain that bullet point that was there. If I go on the weeklies, and let's say I'm just going to go 1 hour for now. If I look at this, how's this trend doing so far? So from bullish standpoint, the value on this week is here. Prior week, right, was just very bad structure everywhere. So the value area is high. Now, if we fail in this value, where are they going? Well, they did have some, if you guys remember, these value area highs that we had multiple stacked here, if you guys recall this. So if you go here, there's going to be somewhat important level for them to see how are they going to handle it, right? There's going to be a pretty big zone. If they can fail this, if they fail this, then, you know, ultimately they're going to fix all this poor structure below. Poor structure means there's no volume and price went above it. Like I said, volume slows it down. No volume helps you because you just fly. So a trend, you want to see it, you know, let's say, let me go on ES. In a good trend, you want to see the stacking of values. Like this one here looks pretty good. Then you see what is happening here. A lot of tight value area, really, really super tight. I mean, and then they sold off from there. they came back very close to this, I would say, breakout profile here. And then what I like to do whenever you have consolidating and then you have a breakout, it's not a bad spot to mark this value area low of that breakout consolidation profile. Why do you guys think that is? Why would that matter?
Because that's when other time frame buyers stepped in.
Other time frame step there, and I'm looking to see if we can, ideally, if we can peak above below it right here and regain it, it's gonna be a rocket. Right? That means that these boys are getting another opportunity to do what?
Push the price higher.
That they're getting another opportunity to buy cheaper. So Danny, if I give you a chance that, hey, you bought some shoes at 5442 and you sold them at 560, right? In your case, let's say you bought them 800, sold it at 1200, and I give you another opportunity to buy it a little bit cheaper at 580, are you going to buy?
Yep, of course.
That's exactly why. So if you're consolidating here, just like this one did, you know, you're consolidating here, right? And this is the breakout of that consolidation. Well, then you're coming back into this value area low. That becomes a really good setup. UPS had a very similar setup on this. If you guys go on the monthly charts, actually can go on 12 months. They had really good setup as well. I was actually talking to somebody, another volume profile trader, about this at the same time. Look what they did here. You guys see it? Is this 12 months value area high? Correct? Right. Came back, you peaked, and people bought it right there, and most likely we're headed a little bit higher. Probably a retest on POC coming and then go higher. But it consolidated nicely here too, so that's good. All right, so that brings us to the rest of it, right? So overlapping, so that makes sense. From when the price moves away from established value area to another price area, one of the two things will occur. The price can only be what?
Accepted or rejected.
Yeah, exactly. So you're looking to see if they're happy trading there or not happy trading there. If they're not happy in trading there and you find access like we did Friday, you're going to see a strong rejection and we're going to flush from there, right? If you're going higher. If you're going lower and you know they're not happy when they believe that it's an unfair low, means that value is not fairly priced and the product or whatever you're trading is cheap, then you're going to get other time frame people come in and snatch it up because other time frame people look for what?
Advantageous prices.
Yeah. So now think about this. We just talked about it, right? So if we believe for UPS the value for a year, this is a bigger time frame, guys. This is huge, right? You don't trade this on a daily, you know, 0DTs. So this was our value. This was our poor low that was set here, right? There's definitely a poor low here. And what did they do? Let me explain for people that don't know. So let's say people that, you know, let's say bought it here, right? I don't know when was this, August. And they put their stop loss. They're like, man, if you lose 121, I am out. And these people are like, man, I just bought it at 124 and I sold it at 145. I'm going to go back down. And like, you know, Danny, I'm going to buy these shoes again. But what do you think these people's stop loss is? Where's their stop loss? Let's say their stop loss is right here, right? This blue line is their stop loss. What do you think they're doing here?
They're getting stopped out, right? If I'm looking at where you put it, yeah.
Yeah, so these people here that bought here, for instance, I'm just giving you a scenario, right? That bought it here, they're getting their stop losses. So meaning, what is this person doing if their stop loss is triggered? What is he doing? Or she?
They're getting out to play.
Yeah,
They
they're
got
selling.
Yeah.
They're selling. And what is, somebody said advantageous people look for what?
Unfair prices.
Someone's buying their sells.
I mean, somebody, they came here, they saw liquidity, and who sees the stop losses? Do you see somebody's stop loss?
The big boys do.
Yeah, the big market people.
They see your stop sells, guys. So if they see a massive level of stop sells on UPS is here, where do you think they're going to auction to?
Right there.
They're going to go right below it, guys. It
I
works.
did not know that. That's crazy.
They do it all the time. Okay,
And that's why you get
Wyckoff,
the peak above and peak belows.
that's correct. Yeah. It's 100% correct. I'm glad you're connecting it. So that's why,
Oh.
I mean, I bought this, right? I bought a lot of it as well.
And that ties in the better to be a little late than early because
That's
they're gonna
exactly
go
right.
a lot. Gotcha.
So if you ever attended any finance school, you guys remember when I explained this before? Okay, this is the stock price going down. This is the stock price going up. This is a fair price. Where do you want to buy? I'm asking, do you want to buy fair price here or fair price here? Where do you guys buy it?
Black Friday deal.
I think either one, right?
Wrong.
The second one.
Why?
Oh, I
Because
get you.
you would have your stop. You would probably get stopped out if you went on the first one.
I was
But
reading it totally wrong. I get what you're saying. Yeah.
But this would be my drawdown.
Yeah.
Here, now you're reversing the trend, right? And this is the POC. Now I'm going with the trend. That makes sense? So, typically, then I would say unless you're, really advantageous, right? These become much safer to buy for long-term people. If you guys remember XLC 2 years ago, we talked about XLC when I was doing this. I said this is becoming probably one of the better buys. Remember, we looked at the holdings, whoever was in the Discord back then. We said, man, this is a pretty strong trend here, right? They're selling, but they hit something here. What did they hit?
Is that the CPOC?
This is yearly. So if you look here from this consolidation, we said that there's a level when you're breaking the consolidation up. I would mark the value area highs of it, right? So let's take a look at this one, just so you guys understand the setup. Guys, you can make decent chunk of money on equities like this, right? So is this the consolidation that we're in? Is that correct? Do you guys agree?
Yeah.
Okay. Then we had unexpected COVID happen. Is that correct?
Yes.
And we came right to that low, and somehow everybody bought XLC here, correct? And we ran massively up, which means that this year's profile broke the consolidation of 2 years in orange. Agree?
Yes.
The prior 2 years POC, if I was to draw that, right, I would say if I draw from here to here, is going to be right here on the red line, which would be a 2-year POC. But where's the value area low of the breakout year? Is it here?
Right at that 2-year POC.
Okay, well, let's put that level on and see how they behaved around it. Remember how we said it's better to be a little late, a little early? So now we apply that V-shape thing. You can buy here, right, and be a little early, or what could you have done? You reclaim this level and you could have put a stop loss even here. You would risk $3-4 on this. And what would you target on a long time frame? I'm teaching you something here on volume profile. So remember, there's a 2 different POCs. There's a POC that's been tested and there's a POC that hasn't been tested. Is there any POCs that haven't been tested here?
Up around that 80.
Oh yeah. And what happened there? Did they stall? Yeah. And then they came, of course. So think about this. Your risk was about $4 to make 31. You find these setups, guys, everywhere. I mean, It's everywhere. Here's, for instance, and I'm not advocating that you guys buy or nothing. I'm just giving you what I see. So for instance, look at this. Are we consolidating here forever? What would you want to see, for instance, on this profile now, if you want to be like, oh my God, give it to me. What should we see happen here? I'm already in Intel, but what would be the ideal scenario we get now?
Peak below and reclaim.
I mean, if they give us peak below these lows, pay attention to this, and then they reclaim this, and then you just basically go, you're gonna fly to this level right here. 43.97. Does that make sense? And I just repeatedly do that. And when we do stock scans, which we're doing today, I did post my profits for last year, gains on long-term portfolio. You have a tendency to do well when you're patient. So
Do you sell up there or do you just hold forever?
no, I would sell. I mean, so it depends your positioning, your age, right? Me and you are not the same age, and you know probably a lot of people are, but it's also your risk awareness level, right? What are you doing, right? If I'm buying for my kids, do I have to sell all the shares here?
No.
No, I don't. I don't have to, because this would be what, 93-ish% or more, 136%. For them, I don't have to sell it, right? I mean, considering everything is going digital, but would I sell it for myself here if I have a lot, and I do have a lot? Probably I would trim, 75, 80% and keep the rest and see if it does something crazy like NVIDIA and enjoy the profits, right? That would be the idea. But everybody trades it differently. I just like to take profits. Does that make sense?
Yep.
All right. Perfect. So that's one of them, right? So we covered this. This, for a lot of people, I think, Danny, you should definitely understand this. The long-term buyers and sellers are mostly active at the extremes, which is value area high and value area low. The longer the period that you're charting, let's say we're charting 12 months, just like we did on UPS, and you dip below it, well, who's active at those levels? And what is expected there? Buying below is expected, correct?
Yeah.
So therefore, they're just going to come in and buy it at advantageous price and go off of there. And UPS has great dividends, right? So, or hedge funds and those guys, they love it, right? Pension funds, they love it, especially, teacher pension funds and all that. They load up on this stuff. All right. So now we get into a little bit more advanced. This is not like, oh my God, you're going to confuse the crap out of me. No, there's just 4 scenarios that you pay attention to, and it's important to understand them. We'll go one by one, and then you guys can basically tell me, where you're failing to understand or where we need to slow down. I want to make sure you guys walk out of this session today and you go back to PowerPoint and then you say, oh shit, this clicked. Now I understand. Your job as a trader is to basically initiate, I would say a lot around value area highs and lows. Does that make sense and fair? You don't want to be initiating anywhere in between POCs and value area highs. You're just gambling at that point. Cool.
Yep.
All right, I'm gonna take a 5-minute break just because I have to go get some water, and all of my family's out, all the kids are out, and I have to use the crutches to get there. So give me 5 minutes. Let's just take a quick break. I'm gonna get some water, and then we'll come back and jump in this. Is that fair?
Yep,
Yes, sir.
sounds good.
All right. Alrighty, guys. Sorry. We can go ahead and start the rest of it. All right. So there's 4 opening types. Can you guys hear me? Everybody back?
Yep.
Yes.
Yep.
I think I'm still sharing. I don't think I ended it for you guys.
Yes, we can see everything.
All right. Perfect. I'm not used to walking with the boot. It's not fun, at least.
Ouch.
And I hate these things. I've had them before, but man, they're just shit to go up the stairs.
Left foot or right?
Right
Oh,
foot.
you're driving. Oh no, you're driving. But
Yeah. Yeah, I don't drive anywhere. I let my wife do the driving. All right, well, let's talk about this. So in relationship to opening a volume profile, I would say it's always that you're comparing. If it's a week, you're comparing it to prior week. If it's a year, you're comparing that to prior year, right? The longer the period, it kind of sets you up as a different time frame trader, right? If you're looking at profiles on yearly, you're not going to have a lot of transactions, right? So you're just going to have to be super patient, right? And there's people that do that from other time frame standpoint, but they also have a lot more what?
Wait.
Cash. They also have a lot more cash. So, right, when I want to make a large purchase, I have to rearrange my portfolio a lot, right? Sell this to buy this. When you have Warren Buffett that's sitting on what, $300 billion worth of cash, he doesn't have to do any rearranging. He's just got the capital sitting there on the sidelines, right? And he's able to execute the trades as he wishes. So cash becomes important, and other time frame people, like we said, they're always engaged, but the higher time frame you're comparing to, that means that you're also other time frame trader. When I trade, I'm a day trader, like a lot of you guys in the Discord. I do look at the weeklies and I swing, like I swung SPY puts. But I do look at it from day to day a lot, right? From SVP, like when we do the analysis on the day and the charting, I start with monthlies, weeklies, and dailies, but everything is in relationship to prior period of that whatever time frame you're on. So we're gonna look at this, right? And four types: opening outside the PD value area or value area, but inside the range. So let's see. Let me go in the presentation mode. If the market opens within a PD value area within an hour balance, we don't exploit outside of the value area. What is that telling you?
the range day.
That means that they're accepting, and most likely that we will have a typical range day, and it could lead to one of those neutral days where it's really, really difficult to trade. What about risk reward? Well, if you have a predefined level where we're going to go, you can make more, but you can't lose more. So those are also kind of reduced, right? A lot of, like we said, short-term traders like two-sided activity. Why?
You just buy the bottoms and sell the tops.
Exactly, yeah, because it's predefined risk, right? When you're expanding and let's say you're in an imbalance, that limits you, well, not limits you, there's a lot more potential to make money. But for a lot of people, and this, I can't teach you this, this becomes more of an experience, intuition type of trading. When you know there's a high chance, sometimes you'll hear me, there's probably good odds that we're going to go IB 3x or so, which helps us understand if it's a trend day or not. That comes in with the experience, right? And you guys hear me sometimes say we're going to hit this level and we go to that level. It's not because I'm lucky, but it's because I've seen that movie play out a few times. And for a lot of you young bucks that, just joined and trading, not my Discord, I'm talking about like, you want to do something better for yourself, learn a new skill. It takes time to get that. There was a cool story where a private company, one of those tankers had a pipe stuck, right? And their ship was basically in ruins. They couldn't get it. They paid a couple of people, $100,000, and they couldn't fix it. They called an expert. The guy's been fixing those, I guess, for 50 years. He comes in, took a hammer, knocked on a pipe. He said, I can fix it in 15 minutes. And he said it would be $500,000. And what do you think the response is from those people that own the ship?
They said,
probably
oh,
said
ship.
no.
They said, well, how can you charge me $500,000 for 15 minutes? These people spent months. He said, you're not paying me for the work I'm doing for you now. You're paying me for the experience so I can fix it in 15 minutes. Right? The same in trading. You guys, you can't be stuck on the immediate. You have to learn. And it's painful, but you have to learn and then apply and then test and adjust. And it's continuous. I've never stopped learning. I always look at stuff. I look at market behaviors. I adjusted my trading. I used to trade SPX heavy. I adjusted that when they added what? 0 DTs a lot, and I felt like there was a lot of manipulation. I'd rather trade without data than with data, right? Because that's also against you. Okay, so with this being said, when you're opening within the previous day value, that means you're accepting, right? As long as you stay within the previous day value, that means you're accepting the value, and most likely you would have a, I would say, a typical day. So what that would look like, if you guys go here, I'm going to go on SVP, close this. We're going to have a few of these. Where is opening within closing? I'll help you guys out here. Let's see. We'll use TPO because you guys will see the open and close, so I don't have to find the days. I want to see how you guys can visualize that and transfer from PowerPoint to here. Let's see. Let's not split them. And let's unmerge them. Okay.
So what's the question? What are we looking for?
So where's this setup that we just talked about? Opening within previous day value, and you're accepting it. Where do you guys see it?
On the 15th?
15th. Okay. You closed here, you opened above slightly, and then you came back inside. I would consider that right to be right on, and I'll just add value area high, and you guys will see it. Does everybody understand this concept? You open slightly above, right? Then you auction, and then you stayed inside the value. Basically makes it a 2-day balance. Like I said, this is a perfect opportunity to draw FRVP, which you could draw some SIGs on, right? Okay, so that means when you're opening within value in the first hour, the initial balance, you're staying inside of it. That's important, right? Because that means you're accepting. What would the rejection look like? Here's the acceptance on the chart. I tried to kind of replicate it. Previous day value high here, you opening, and as long as you stay within that first hour inside of it, there's potentially a high chance, like 80% chance you're going to have a typical day and you're going to stay here and most likely create a range. Does that make sense?
Yep.
Here's a look above that, right? So we kind of opened right here, then we sold off, but then you see the value area high also happens to be a high volume node. We auctioned higher, came back, auctioned higher, came back, and we kind of came here and closed, right? When you're closing, let's say on days, let's say within 2-day balance, if you're closing on the extreme side, opposite side, does that mean anything to you guys? It's a tricky question, so don't respond so fast. Think.
Repeat the question.
If you're in a 2-day balance like this and you close at the value area high of the two-day balance, how do you read that?
That's bullish.
Okay. Is it confirmed bullish?
Not yet.
Not yet. Okay. Yeah, I just want to make sure that you guys are understanding. But if you're in a trend day, let's say we had a trend day, then we opened higher and we print a neutral day, but we close at the value area high. What does that mean?
That's bullish.
That's extremely bullish. That means it's a neutral bullish day. Most likely we have a gap tomorrow. Not like tomorrow, but I'm saying in the example that we have a bullish setup. Does that make sense? When you close within the bracket at the highs, it doesn't mean much, right? That's kind of what we did just now on a larger time frame. Isn't that what we did? On a larger time frame, if you go on the monthlies, right, on even the yearlies, the value area, we closed at the 2024 value area high, a few points away from it, right? About 30 points. That's nothing on a yearly. So that doesn't mean much. But when you consolidate, now you want to pay attention to the consolidated range, and that's important. So don't confuse that, because sometimes it can be confusing. So this is the acceptance. You open above, and most of the time you're going to stay inside of this. If we crack this high and low, let's say between 3 and 4, what type of day are we forming then? If this is our typical and we crack between 3 and 4, what type of day do we get typically?
Friend?
Anyone?
Normal variation.
Normal variation, or called what else? Number 4?
Expanded typical.
Expanded, yeah.
The extended typical. Okay. So this is the acceptance. Now you also have a rejection. If the market opens within PD value area, within the hour balance, we explore outside of the area. What period would be exploring outside first? So it would be A or B if we explore. Did we have something like that happen recently?
Yes, we did.
Okay. What did we have?
We had like a major drop in that A period. Like it was 3 days ago.
What about this one here? We opened below. What did we do then? We got back inside.
Pumped up, yeah.
We executed the 80% here, right? And then we had the spike. There's a lot going on this day. So we went above. So did we accept or reject on this day?
Accepted higher.
But we, in terms of prior day, did we accept this value or reject it?
Oh, we rejected that.
We definitely rejected that value. Does everybody see that or not? Does that make sense? Is everybody following this example? I'm just making sure you guys are following. I want everybody to kind of catch up and step next level. Make sure
Yeah, that's for the
all of this is in your head.
Yes.
Okay. So
Did-
this is
did
how
we
the
re- I'm sorry, Shorty. Did we reject because we came back into the value?
So if you look at it, right? So if I go back here, this was the value, and there's a lot of clues about this value and rejection. We open below it, and it's a setup, right? So this is our, let's focus on these 2 days, and let's use it as our analysis for next couple of examples, because it has a lot in it. Okay, we'll focus on these 2 days. Ignore this right here. Where do we open in relationship to value of that prior day? Imagine this is today. We open below value, but what?
We closed within the value.
We close below value, but within the range. Would that be this setup?
Yes.
Yes. Open as
Okay.
value. Yes.
So we're opening outside the value. This is our value. And yes, today I'm giving you guys everything I got. So hopefully you guys are, this probably be your better lesson than anything else you've seen. So we're opening outside of the value, but within the range. So what do we do? Is the market confident or not confident when this happens?
They're not confident.
Not confident.
There's some going there, but they're not 100% there, like to go, right? So here they open, but they're not sure they want to go lower. So what do? They create a poor low, as we explained. We're going to clean it up this week, I guarantee you. We're going to go visit this, but here they're telling you we're not confident. And what did they do here? Well, we got crowded low. If you go in 5 minutes, it's going to look pretty bad. How many people got killed here on the short side?
I did. Enough.
Yeah, probably a ton, right? And then you had the spike and that ended them. That basically was like a nail in the coffin, like, oh shit. Now I gotta close, and then you see this buying, which is short cover rally, most likely here towards the end of the day. They're closing their puts because they're like, shit, we're going higher. And then there's an indication that you could have used between these 2 days to give you really, really good setup to make money. Okay. So this value area, I keep bringing this up. How wide is this value? Is this super wide from this day?
No.
No, it's not.
This is 2x below average. Average is 25.75 right now, I believe. Let's see. Average is right now 33. And you're giving me 11.25. So remember, I talked to you guys about it, right? Well, I mean, not talk about the hammer, but talk about the lamp. If the lamp has a small base like this, and you have a nice little lamp, and then you have a lamp that has a base like this, which one tips over if your crazy kid runs into it?
All base.
Yeah, the small base. So think of this as a base, right? It's a small base. And then as soon as they got inside the value area, like right here, as soon as they got inside right here, how could you have played this? I'm trying to give you scenarios you guys can relate to and trade it. Let's say I took this trade right here on the long, right? You're using 5 minutes and you take this trade. Where should you put your stop loss and what should you target? So far, this is live. I'm pretending it's live, right? I take this long. How do you play this?
Could you put your stop loss?
I agree with him. They just say,
Could you put your stop loss below the open?
very
Below
good.
that
Definitely.
last candle.
We can put it right here. Ashley, go on mute, please.
No, a little lower because they could fix that poor low.
Okay, so a little lower here. Okay, but now if you think about this, I'm just giving you your scenario. So you took this long. This is your stop loss. Well, you really have to nail this trade. But where's the most probable setup for you to make money?
Shorting the value area high on that day.
Okay, but remember when you went below the value and then you regain it, right? Is that bullish or bearish?
That's bullish.
Okay, remember this 2 bullets here? Especially this one, that's, we're interested in that one right now. So what does this tell you? Was this the same setup that highlighted, executed here?
Yeah.
Okay. So now let's go look at this screenshot right here. How's that one here? So what happened in that scenario, and I'm trying to find these little arrows. Let's see this one. So what they did, right? They opening within the PD value area. I'm not looking for that one, sorry. Okay, opening outside but within a range. This is exactly what happened. But which one happened? That one. Which one is represented here between these 2 days? Left or right?
I guess neither.
Anyone else?
Can you repeat the question?
We have 2 day, right? We have this price action here. We opened below prior day value, but within the range. So this was leaning more to this type of opening. We opened below the PD value, but above prior day low, correct? You open here, and what typically happens, and remember, I always say, I actually wrote it on a slide somewhere. If they break this, then the trend is most likely going to be lower and they're going to continue unless they do something like this. And then it's totally opposite, right? What they did here on that day is they opened here, they trapped some lows, they made equal lows, and they regained the PD value area low. So what does this set you up for?
That's where you can take that.
This is where you go long. If you're going long here, that's extremely bullish. You're targeting PD value area high, and now you go back to this setup right here. So let's talk about it right for a second, right? What did they do? They opened below, they reclaimed the value area low. Another thing that I would use to maximize profits is this. Why would I mark this? I know this is new for all of you. Why would I mark this one?
A buying tail base.
That's the buying tail, right? This is the access low, unfair low. So if you regain this, I could definitely now give you a different scenario that gives you a little bit more probability. Because if I'm targeting this right here, correct? And this is 155, and what if I play something like this? Could I take this trade?
All day.
Yes, that's a great trade.
This would be a perfect trade, right? This is a scenario where market profile is giving you what?
Confirmation.
Giving you another piece of information from the market, the MGIs, right? They're giving you that. And then if I hide this and just focus on volume, here's your volume. First sig is sitting right here, and I'm on RTH. If I switch to ETH, see what happens. Yep, so the value area low would be at 620.25. And then this is a P-shaped volume profile. And if you remember, how do you play P-shapes on retests? Because that's next.
Take it at the little node.
Yeah, well, little node, but high volume node, right? You would have opportunity if you hold this right here, then most likely that you're gonna go higher and revisit the value area high, which they did. Correct? Is that what it says on P-shape? But we'll cover it here coming up shortly. So that's this setup. And this is not my favorite type because of the confidence level. When you're opening, outside of value but within the range, it's not my tip. That's not my favorite day. We are not imbalanced. That means that there's some market imbalance, right, happening. Easier to trade, in my opinion, only if what happens.
If you stay in the range?
Well, if they reclaim those value area lows or highs or crack below them, right? That's the only the beauty of it, because 80% out of these plays out nicely, especially if the value area of the prior day is what? If it's smaller and narrower, what are the odds we're gonna kind of traverse through it?
All right, because the other time frame buyers are going to step in.
Yeah, exactly. And then even if it's short term, they're gonna push that price on this 11 points quickly, and that gives you 80% chance that you're right on 11 points. You could live off of that, right? You can make a living. You don't need another job. Okay. So that will be opening outside, but within the range, and then that'll be the rejection by here. Why is this hard to trade? Why would this be hard to trade for some of you? Hard to trade for me too.
I would say the patience and just waiting for the setup when you first start is the hardest.
The setup, this setup has to come to you. If you chase it, you're gonna get killed. Because imagine if you, what is this? Imagine if you shorted right here at the bottom of this. You want it to be, you want it to be the momentum trader. What happened to you here? I don't know if they, do they have open interest? Oh, they have open interest. Okay, well, that's cool. I didn't know they had. Wow, okay. So how would you trade this? Well, if you're if basically if you're in the setup that we just were in, opening outside of EA but within the range, a lot of people got short here. I guarantee you, a lot of people were like, you know, what's in their mind immediately? What is this?
Oh, that they're gonna fill the gap.
Oh my God, they're gonna fill the gap. I can catch 11 to 93. They already counted their monies, right? You know, you don't count the chickens before they hatch. And that's what they did, right? So that's why I say be a little late and a little early when they came back and bounced. And that's why I hate that, because the setup, you really have to listen to the market on this. If they reverse it, then you're gonna rip, and that's exactly what they did. They reversed really nicely, and then they basically exploded. I would say much higher. I'm gonna look into this. I like open interest to it. I didn't know they had it. Does that make sense? Does this concept make sense, and why? Because this one here can trick you, because you can get into a very, very, very bad position at a very, very bad location. Does everybody understand where and why and how to play this?
Yeah, if you're at the
I do.
it's the reclaim of the value area low, and then get in.
So like here, if you open inside here, you're waiting for it to lose. And I don't know how I do these arrows, sorry. Oops. If you come here, right, and you, let me see. So if you come here and you lose this, right, this is the wrong level. You come here and you lose this here, then there's a high chance that you're gonna probably go to the 80%. This is the definition of 80%, and you can play that. 80% rules on these type of days are really, really probable. And are they opening far away from the value when they do this from a prior day value?
No.
The closer you are opening to the prior day value and you crack inside, the higher the odds that you're gonna do what?
Trade within
the whole move.
Yeah, you're gonna do the whole move. There's a very, very high 80% chance you're gonna do that. I would say the whole area is gonna be explored. And I would say that's the stipulation on 80% rules, just because we crack inside doesn't give it higher probabilities. What are other things that would increase the probability of this 80% rule playing?
Volume.
Okay, volume. What else? I covered one. Well, I covered two.
If we had poor highs or unfinished auctions at the top.
Beautiful. If you had that, maybe you auction away from it. So the distance from the value would be 1. What about the width of the value? Would that, right, be a big one?
Yeah, I would say bigger is less chance.
Exactly. So the shorter, the narrower the value, right, the higher the probability we're gonna go through it and explore it. So those two factors, and then you know, market direction is important. If you're, you know, as we're going higher, right? What are the odds that we're gonna basically explore this whole area? We're in a bullish trend, obviously. We're at all-time highs with everything falling but the stock market. So now if you think about it, right, all 3 points align. The distance from the value where we opened, the value area width, and the market direction, that they all align for 80% rule here.
Yes, I would say they did.
Is there any single points that I just mentioned that did not align? We opened below the value, not too far from it, right? You're talking about 10 points away from it, and then you pushed inside. The value area is tight. You're in a, I would say, a bullish trend higher. So you would be buying with the trend in a tight value area. So the odds to play this are really, really good for you. This is really high probability setup. Does that make sense? If you do a week of just waiting for these type of setups, it'll be your first green week if you haven't been green in a long time for a week. there's somebody in our Discord that basically sends them to me every day. And I would say, let me just look. He's been doing pretty well. Let me see if I can. Is he gonna have losses? Yeah, certainly. But what do you guys think for his returns so far? How's this? 51% for 4 weeks.
Yeah, you can make a living on that.
That guy's doing great.
Yeah, and remember, you guys have this template. If you're in a Discord, I suggest you guys use it, right? Because it does calculate some other stuff that maybe other platforms don't even give you. But when I do one-on-ones with you guys, as you guys know, I give them to you guys for free. I will meet with you if you're willing to put time. So I'm giving you my time if you're willing to put time. If you're not willing to put time and you're just fucking around, then don't waste my time. And that's one of the reasons why the Discord is, I would say, limited, right? But I'm able to analyze quickly where his problems are, right? And then you can look under the covers and understand where he's failing or getting better at. Okay. And he plays a lot of extremes.
This one is for futures only, right, Shorty?
I have for futures and equities. We have 2 types of templates.
Okay, thank you.
I'll post them shortly after. All right, the last one. So we covered, from the agenda slide, I guess here we opened. I'm sorry, here we opening outside, but inside opening outside the value, but inside the range. We just covered that one. Open outside the value, but outside the range. Why is this one? Is this one? How would you guys stack rank these? Between 1, 2, 3, 4, from the most bullish to least bullish, or highest conviction auction to lowest. How would you guys rate these? It's all about probabilities. Opening outside, what? Which one? Number 1, 2, or 3? Which one's the highest conviction from auctions?
2.
Okay. What's second?
Number 1.
Okay. And then 3 and 4?
4 and 3.
Okay, that's correct. Yeah. Does everybody agree with him?
Sounds good, yeah.
Yeah, that's accurate.
Yeah.
Why did he pick 4 over 3?
Because rejection, then you're not gonna move. You're not gonna be accepted in that value. So you're gonna stay outside that value, which is
Shows you a trend.
not
It
as
shows you
good.
that people are showing up more. That's
Yeah.
correct, Chris. Yeah. So I would agree with that. Yep.
Yeah, my thinking was you're just the furthest away from previous day value.
That's fair. And to break a value, what do you need? Who needs to step in?
Other time frame buyers.
Exactly. So if there's other time frames present, that means that we might have a little bit of more confidence one side or the other. Right? When you peak above IBH, right, or IBL and you get back inside, is that confidence? That's not confidence. That's not. Opening outside of range, does everybody understand what that means? That means you gap up. We've had, I would say, plenty of examples lately. So here's your close here, and you opened above it, right? And that's this scenario. So if they came back for a retest on this 93 during RTH, what would you do here? If instead of, don't look at the third day, let's say the second day here, they gave you here. Or let's say this first day came back and they gave you this retest. Would you go long?
Like a nice long.
Yeah, you would watch for opportunity to long. But what happens if they crack this? Lower.
They're gonna explore that value lower.
There's
That
a high
previous value.
chance you're gonna visit this little area right here because they're rejecting that, right?
Do you think waiting for the value area high and a close for the long would be best there? That's like how I would look.
Exactly, right? I mean, I would, as we come here, right, I would first look at the footprints to make sure that we're getting some bid, that there's some some orders coming in there, right? And like I said, a little bit better to be a little late than a little early. Could you play it first tap, leave a limit order at 93 and a quarter? Yeah, certainly. You have value area high, which matches the access. So if you're going 93, you're giving up about what 5.5 points on the stop loss potentially. You have to go somewhere. You know, if you're going here, you will have to find what you're targeting, right? I would say probably this value area low. And if you're playing it like this, could you do this? Yeah, you could definitely take this trade. But if you give them like dip inside and then they reclaim it, did they do anywhere? Did they do that recently anywhere?
Right there the day before.
What about on the opposite side? Did they do that here? Did they open above it? Let's look at it. So we don't count and, right? So if this was our high, this is second and third day, right? Where did we open on this day? So this is our Thursday high. All right. So if this is our Thursday high, where do we open the relationship to prior day? We went between what? Value area high, which model is that? Is that this model? Or is it this model?
Within the range.
Within the range.
So we would have been in this model and would have been this one right here. If we open above PD value area high, right? Here's your previous day value area high. We opened above it, but below the range. So that would be this model. And then what they did execute is that they lost value area high at 39.25, which was also our spike level. They lost that. And, you know, we did not, I believe we did not get the value area low, but we were very close to it. We were targeting, if you guys remember, 17 to 19 on this short, but we did not get it, but we did close that there. But does that make sense? So, but if they would have opened above this and they don't hold that Thursday high, it's pretty bearish, right? I mean, people that try to push higher are failing, right? So the imbalance that was caused pre-market is most likely going to be negated and we're going to go lower. And that's, I would say, opening outside of range right here. And then here's the text. If you open outside of previous range, bullish or bearish, that means market sentiment has changed, right? You should look for two scenarios. Market continues in the direction of the breakout. And as long as what? What is the key when you're opening outside the range for them to hold?
Previous day range.
You want to stay on the extremes, the PDH or PDL. As long as it doesn't go back inside the previous day, market accepted the breakout up or down. So that means if we are to play this and they went higher, and let's say they held this level, that would most likely seem and be accepted that we're going to go higher, right? But since they failed this level right here, along with the 2024 value area high, there was a lot of bearish signs that we we're going to go lower. Then they came to those spike, they rejected it, tried to bounce, and then they went lower. Does that make sense? Opening outside the range. So you don't have a lot of scenarios, guys. You should literally go after this class and go back to it and kind of find where all this happens and see how it plays out. Calculate if I took this trade, this setup, how would it work out for me? Would I have made money? Do it for 60 days back and see if it makes sense and what do you find? And that's going to help you as well. Remember these patterns. So when you see it, it's going to be engraved in your head like, oh, you're opening here. I'm looking for these things. And you're not going to be putting emotions in your trading, and you're going to be putting rules in your trading. Okay, so that's opening outside of range. So the scenarios that happen here, right, is if you go here, instinct is that they're going to defend it, right, since they had the gap initially. If they fail, most likely value area high, lose that, you're going to the value area low. And the opposite is true as well here, right? So if they open here, they regain that, that becomes bullish, and then the rest of it also, if they reclaim this, gives you higher odds that you're gonna visit that 80% rule. Does that make sense?
Yes.
Yeah. I prefer getting 80% rules on the prior setup, but this one is quick. Typically, when they do this and they lose PDH, PDLs, this one usually is quicker than a prior opening within the range, but outside the value. This one usually leads a little bit faster. Okay. All right, the date types. There's not much to remember, so I would say a lot of you guys at least print it out or save something. There's I would say two slides you want to be aware of. Volume profile, market profile, they have similar date types. I mean, there's just slight variation in the naming. A trend day is a trend day, right? That means you come out and you're just putting in the bullish case, you're putting higher lows and higher highs. You're not going back and forth. You're just ripping in the place where you opened and you're going that direction. That makes sense. That one's fairly easy. And this one's usually brutal for people because they either fade the move or they don't understand it, where we open, how we opened. They don't understand the factors of value, and then they get punished. Double distribution trend day, so that's going to look like an uppercase B in terms of the nodes on volume profile, like I explained earlier. There's going to be two distributions. You're going to have, we agree on distribution. Let's say in this case here, we are agreeing that this is right here at the moment. And then somebody comes in, some piece of information is given in the market, and they're like, oh, no more. So the sellers initiate and they start selling, and they come to the second distribution. Does that make sense? So now you would have basically a double distribution profile here. It would be like this. That would be your, pretend this is B shape. Make sense? So this is the most, I would say, confident date. This is the second highest confidence date. And there's rules how to play them, right? Wide initial balance. So we experience a lot of these, right? Most of the times, I would say, when you have these type of days, right? It's not short the tops by the bottoms, because not necessarily are they always going to get to the top or the bottom, right? It makes it difficult to find good spots, but the range is pretty nice to trade when you have the balance of 30, 40 points on an opening. You can find plenty of opportunities to trade, but the entries and how you enter have to be a little bit more accurate. So that's wide initial balance here. Then you have the moderate initial balance with the extended typical. It means that you set the range, you set the balance here in the first hour, but it's not as high as this one. So what's the difference between these two? And why is one more probable than the other to break the balance?
Is it because the wide initial, the other time frame buys are there?
It's because of the balance, right? There's other participants in this one here, and here it's narrow. Remember the lamp? If the balance is tight, there's a higher chance you're going to break it, and typically that leads to extended typical day here. And sometimes when we're trading live, I'm sure you guys have heard me, I pointed it out a few times. Like early in the day, I ask you guys, what are the odds that we're going to make this type of day, or what day could come out? Yeah, is that, we talked about it here. I think we talked about it here as well. Did you guys, does it ring a bell? So for instance, on this day, was there any clues that this might be a trend day down or potentially a double distribution? Yes, no?
B period close below A.
That was definitely a clue because we had massive access on the top. Then you also had, you had what here between C and D?
Rejecting the spike higher.
You had a poor low between the two periods, right? Here. And then the G period came in and sliced through that. We have the spike from the day prior. So most likely you're going to have this. And if you're not agreeing on this area on the top, so if you kind of zoom out, if you're not agreeing with this area and then you're getting this extension in G period, well, maybe you're going to find acceptance like they did, right? Somewhere below. So what does it look like? Well, let's look. So if you do this, you have a perfect what?
Double distribution.
Yeah, you have a perfect double distribution. And I think we were talking about this occurring a couple of times where they leave single prints. I think one of the days also when they had super tight and they cracked, and you see top node is right here. You have single prints on volume profile that are, hide this. You have these little single prints right here. I would say low volume node is sitting right here. And then you have the bottom distribution is right here. So we're either gonna be accepted in this area or this area. We come back from the bottom for the retest, that becomes what here?
Good short.
Becomes a pretty decent short, right? So I will take this probably on the first step here. Okay. Let me do this. Okay, so that covers the days. Then you have the, this is going to be your range day. These can be really good days, but it's also, this one is dependent on the factors really from, how do you open and where do you open, right? So it's a wide initial balance, and then you're basically going and you're looking for responsive activity on the top and the bottom, right? You peak below, you get the buyers, and then you go. We actually had one of these days not too long ago. It was actually nice. Let me see if I can point it out. Find it. Maybe it was this one here. Yep. So what do you guys think about this one? How's this day? Profile is printing what shape?
D.
Yeah. So this one is printing D shape, right? And what is this one doing? So if I go here and I target this, we went above. Who showed up on the bottom?
Time frame buyers.
Buyers.
Responsive buyers stepped in. We went above it. Who showed up there? Responsive sellers. And then basically they closed, at the highs right here, which would indicate bullish what? Bullish, very bullish close. Remember, I talked about this earlier. What did they do from this bullish close? They
Gap down.
gap down, right? And then, of course, they consolidated here again. And you can see where they closed, on this lowercase b, but this is a compressed b. So that means that there's going to be some trapped folks. And they did the same thing here, right? And they trapped the more, closed at the highs. So the reversal was pretty clear. And now when you look at this, right, as long as they don't crack above this level, let's say 34 to the single print zone, wherever that is, we have a good opportunity to go lower tomorrow. All right, so I would say this is a fairly important, for you guys to understand and kind of match to what you're talking about in terms of date types. The normal days, what would you call that in volume profile?
That the D?
Normal day.
Yeah, that was just a wide initial balance day. What is a normal variation here? Which number is that?
Standard typical.
That would be extended typical. That would be this one. Then you have the normal trend day, which would be just number 1. Then you have a double distribution day, which would be just a double distribution. And then you have, this one here, sideways, which would be neutral day. Does that make sense? And then each one of these, right? Normal days, if you have a wide, typically the A and B period make up 85% of the range. So if you guys go back to your charts, for instance, when we had the D shape here, so A and B periods were here, but the A and B had something unusual. Okay, so we had about 54 to about 25, so about 30 points range. And I would say a lot of action happened within that area. They peaked above, they had some poor highs between A and Bs, and they proceeded higher. But typically, 85% of the range is going to be set within this. Does that make sense? So that'll be on the normals. Wide initial balance, and that balance is not broken throughout the day. Wider the balance, the harder to break, right? Tend to stay within the balance. Short term is in control on normal days, and then it's a balanced market, right? That is awaiting some more information to make a decision. Normal variation, during the first half of the day, we get an extension. Balance is not as wide as it is in the normal day, just like we explained that here when I was covering this one and this one. You guys nailed it, right? On most extreme normal variation day, the IB roughly doubles the initial IB range. So that's true, right? As long as we stay there on below 2x IB, that's considered a normal variation or extended typical. If extension is excessive, long-term is gaining control. So what can you get out of a normal variation day? What type of day can you get to? Can be trend day, because trend day usually just goes out of the gate, right? Higher highs or higher lows, or lower highs and lower lows. So this one would be correlated to transfer into what day?
A double distribution?
Yeah, definitely double distribution day, because you agreed on one value somewhere, and now you're no longer agreeing on that value, right? So would this be that type of day here? This January 13th?
Yeah.
That's 100% that, right? So if you think about it, this is your balance, right? And if I take this and I just grab this and I change this to, where is it? Okay, so there's 1.5 and there's our 200, 2x. And where do we reject?
50%.
Well, we rejected there and then we closed right. I mean, we basically went here and closed at the 2x, which makes it this, correct? Doubles the initial range 2x, and that's what we did. We doubled it basically, went from here to the top, and we tapped it perfectly. Does that make sense?
Yeah. So in general, the application of these day types is you're just trying to anticipate what type of day it'll be.
Exactly, yeah. I'm trying to see, especially, for instance, in this day, where do we go? How do we get to the ES? I thought I had another chart. Unless I changed it somehow. All right, it's fine.
So like in live trading, if we're like approaching like the extreme high of something, we're like, okay, it'll likely be like a normal day. But if it breaks, you're like, oh wait, now I might be expecting it to be a double distribution day or something like that. And that's what you're trying to anticipate?
That's correct, yeah. That's what we did the other day as well, if you remember. When we had the super tight value area, let me try to find it. Forgot where's the setting to trying to find to enable it for prior days, but I guess I can't. So anyway, so if you look at the value here, let me just enable it on this. So if you look at this, as soon as it's done calculating, I think it's just going to do it for one day anyways. So let's see. This will be, you see how tight, this was the day I was looking for. The initial balance was super tight here, right? And we went actually 3x of that. And we went 3x because how tight is the value here? Well, not very tight. And we made higher lows and we made higher highs on this. So when I saw this, what does this look like to you?
D-shape?
Well, I mean, it started building value on the bottom, and then you had this split between the two periods, and then majority of the action for the day happened higher. So indirectly, if you're to draw this with volume, what you're gonna get is you,
double.
I had a distribution here, and I was looking. I said, well, this can end up in a double distro because the value is tight. We're most likely gonna break it, and they did, right? And then that was also the value area low, which we talked about the setup earlier. So you knew at least you're gonna get this. 80% chance you're gonna get this, but they proceeded to go a little bit higher than that. So if you're
That's how you use that in relation to the
exactly
previous value area.
exactly. I'm trying to form what am I going to get out of it. If I do this, where's the top? The date type would be this or that. And they can give you a range. They can give you potential, where do you stop? Even this spike obviously is rejected now, but I didn't anticipate the spike, but at this time here, I didn't think spike is happening, right? It just wasn't there. But at one point, that spike, was it present anywhere else? Do you guys think visible we're gonna get a spike that day?
I think L made a higher high.
Yeah, then you say there's a high chance that L is gonna, if it makes higher high opposed to really high odds, we're gonna get a spike, right? And we targeted, if you guys remember, we targeted 45. You guys remember I said 45.5 was the level? Do you guys remember how we got there? Well, let's just do this. And let's change this to extensions, and let's see. So we changed this, and that was, I think it was like this. So we're targeting, I think it was 40, I don't know which one, 42.5 or 45.5, one of the two. We're targeting that based off the fibs, because if you go here, you have the value area high 47. You could have targeted that. I just use fibs for the spike. Usually spikes not, rarely do they go a 20-point spike. Usually it's not that bad. Okay. So does that make sense?
Yeah.
And normal variation, when you think about it logically, hey, we're agreeing on price and we're no longer agreeing. Who and that, or what type of participants will disagree with the price?
Long term.
Yeah, long term. So that means, what about control? That means you had short term that were in the control, and then I would say they lost it, right? So that's that, right? On the normal trend day, I think, we typically, you're looking for extension over 2x. And you don't want to see too much consolidation, unless it's at the top in a P shape. You don't want to see too much consolidation anywhere else, right? But the top, some profit taking, it's definitely long-term in control. And that would be considered imbalanced market. And I think we killed this one so far. Double distribution, you agreed on something and then you disagree and then you look for value lower. Most likely creates a double distribution trend day, right? So we've seen this one happen a lot. Neutral days, if you see this, right, this is, it can be tough to trade because when you set up the IB, sometimes they peak above the IBs. And I think we had this one happen not too long ago, if I remember. I think it was this one here. Do you guys remember this or no? This is your IBH for the day. This is your IBL, and you see we were trading here. We went above, we went below, and then bounced. And then at the end of the day, right, just at 4 o'clock, they sent it lower. And I think this was also potentially, was it a spike? No. So they sold off, but next day we gapped up. So this was, I would say, a normal. This was a neutral day here. Smaller IB than normal, and no influence from other time frame participants, because if they are and they extend it, they typically go with it, right? Make sense? Okay. For the day types and how to trade them, I'll cover, the D shape. This is fairly simple. Whenever you're opening within the value area, right? We covered it within the value area concept, so I'm just adding a day type to it. If you're opening within the value and you're accepting it, most likely you're going to have a D shape, right? Could you have a compressed lowercase b, but you're going to stay within the value? There's a high chance you're going to have a same range as prior day, right? So you buy the bottoms and you basically sell the tops, okay? And you can use the POC as your exit point if you're really itchy to take some money off the table. P-shaped profiles, right? When the price, and basically this is when you're bullish or short cover rally, usually triggered by short cover rally. And if you're going to continue, you don't want to lose the value of these value area highs or lows in this case for lower price action. How to trade them? You can definitely trade this off of these nodes, and that's what I was talking about earlier, where we consolidated, they re-added to their position, we pop, and then when they come back to these nodes, you see them coming back and bouncing, right? And you can have multiple of these, like you have 1, 2, 3, 4. You know, you could definitely bounce here. I would prefer to bounce somewhere around here on these, right below the value area low. If that's the setup that they're giving you, buy it off of those and look for a rip higher. If they lose these, there's not much interest to trade here. Well, careful, because there was not much interest to trade here to begin with. But most likely you're just going to go through it and flush. This is a lowercase b. This is just the opposite, I would say, of P. Same setup. B-shaped, this is where you have those single prints, right? If you're rejecting one value, most likely you're going to accept and seek buyers at the bottom, or opposite. If you're, rejecting bottom, you're going to go to the top. How to trade them based on volume profile is a double distribution. If you go here and you reject out of it, most likely you're going to go here. If you go long, you can definitely close this and potentially peak above and fail. You can go short unless they close, they rip here and they close above this node. I would say don't be short on that one. Okay. So that covers, I would say, what I want to cover from volume profile and a PowerPoint standpoint. I would say the next key component is, well, Shorty, this is great. How do I use it? Okay. So the next component is just going to prep us for the market, right? And we can use volume profile to do that. So typically what I do is I start here. I will start on 1 month, right? And I use 4 hours or dailies, whatever you want to use. And this is your monthly, and we're just going to go to the H. And how would you guys read this based on what we've just learned? So kind of apply it to what you've done.
The values are overlapping.
Values are overlapping. We went, so the way I would read the price action is we went below the value of December. We went lower than before because we did put in what? A lower low. So we went below, but then if you think about the October, you guys probably remember this level here. We're wanting this for a long. So if you think about this right here, this is a big, big level, right? This is a massive level, and that's where they came from. And they bounced it perfectly off of this level. And then why did I circle this area? Well, not circle, sorry. Why did I draw a rectangle here? Is it fair to be such a wide area?
It's a previous balance, like breakout.
Yeah, so this was our previous balance breakout, right? So if this, remember I talked about this earlier, if this was our balance right here, I'm just going to go to this level. When we're looking, this is a long time frame. This is a monthlies, right? So if this is the balance that we had, which profile was the imbalance? Was it this one? This is the one that broke this balance. Is that correct?
Yes.
No. So I would just always be aware, where's that value area low of that level? And in that case, it was all the way 801. The half of that range was perfectly tapped at whatever, 810-ish. And I think there was some gaps in this area from maybe Trump, or I don't know when that happened, that whole fiasco. But there were some gaps here that we got filled. So now, right, if I'm looking at today's price action, what is the market telling me? Well, I know this is December value area high, so I would go ahead and mark that, right? And it's important to know where your previous monthly value area is so you can anticipate what?
Rejection there.
Yeah, I can anticipate some other time frame sellers to show up, right? So this is my December, and I'm interested to know where's that December value area low. Why?
Support, potentially.
Yeah, support potentially, and I want to know, right, what is the potentially the 80% rule on the December? Where's the value? So now I know the value of December is this orange box, right? So if you're gonna stay in the orange, and I can potentially include it to be up to here, right? You guys see the October value area high matches December value area low, so this level becomes super important for them. Because if they reject this, what is it telling you? What is market telling you here? Treat this as a range. So what is market telling you if we lose this 59, call it 74-ish?
Then it's gonna go down.
Yeah, it's rejecting that value.
They're rejecting the 3 months of area, right? So I can take this FVP and I can be like, all right, well, what are we talking about here? So the value area high is at 71 level here. 60, 70, whatever, one-ish level. So if they want to play with fire from 71 to 5, now 74, they can drop that if they lose this level. And right now, on a higher time frame, if they lose this 130, which is December POC, why couldn't we target this level to be the next level here, about 60, 70? Would that be a fair level?
Yes.
Yeah, I think that's a pretty good setup, right? So I would definitely play that in such way, right? I would say this is my what? And that just means 3 months SIG1, right? And you potentially even make this, you could make it a little bit longer, right? Because when you look at this, all these months are here, are they not? 1, 2, they're all within the range. So here's our SIG1 in this area. Then you have the POC sitting right here, which matches the level that we just identified. And it's a pretty big level here. I would watch to see how did they behave around this on a longer time frames. So if they crack this, I would say high chance of 70, 60, 70, and then ultimately this level, lose that, and we are hitting this SIG1, I would say rapidly, right? It's gonna be quick. And you can see the distributions. It looks like one of those, what is that game that we used to play back in the day? Like the little ships and shooting, if you just rotate it 180. You guys know what I'm talking about? What is the
Battleship.
Battleship.
Yeah, the battleship, man. It's just brain freeze. It looks like a battleship, like your little here, node here, node here, node here. So if they lose this, we're gonna go. And now if you change this to 95 value area, what am I getting here?
Your SIG2?
Yeah, your 2 SIG.
I'm getting the two. Yeah, this is my 2 SIG for 5 months, right? So this would be pretty big level here, right? At 38.40, I would definitely watch, see how they behave, and they bounced from it last time. And if I just go here for a second, you guys will see where exactly they bounced. They bounced between 2 SIG and 3 SIG. Because we've been in this bracket for some time, because this was our prior all-time high here as well, right? So now they're just trying to build value higher from, let's say, half year setup, from a long-term setup. Are we bearish?
We're bullish.
No, but what if we lose this level right here? If we close below 42, what happens?
Bearish.
Well, you can expect some big pullback.
We're
It would be
bearish.
much bigger. It would be much bigger than what we've seen so far. Because they would have to explore. I think it was 5,700 first. Somewhere here. They were 5,700 would be big. On ES contract, you can see like continuous. But ultimately, you're looking at 5,100. But no signs yet, right? We're in a bracket. We're short at the top, and that's it. So on the monthlies, conclusion is what? Are we in balance or out of balance?
Imbalance.
Yeah, we're definitely in balance, right, on the monthlies. So now if you look at it, here's your monthly profile. We're in balance. So prior month, we're right at the POC at the fair price. If we lose that, and it happens that this week we have FMOC, I think Meta has earnings. Is January 30th this week? Yeah, that's Friday or what? That's January 30th.
Don't all the big boys have earnings this month?
Apple has earnings on the 30th. So there's a lots of news to play in this range. I personally think we're going to go lower from here, right? Most likely we will go test these levels here. And then I'll be careful with any shorts around this level from higher time frame perspective. because you had this high here, you peaked, you failed, you went inside again, you didn't like it, then you made, I would say, to another critical level, which was prior high here, all-time high. They came back and they bounced nicely, right? They cleaned up this high, and now you see, you know, if you guys remember our penthouse, as we call it, wasn't this our penthouse right here? So if we lose that penthouse, which was also November value area high at 610, 611, this level is so big, and 611 and a quarter is the level that we had as a low of that 3-day balance that we have here. So we'll talk about it shortly.
Hey, Shorty, quick question about the penthouse, the sell-off. I know I call it the Jerome Powell POC. How'd you get that level?
This one, which one? This one here?
Yeah, it was on the. It was you got a POC off the sell-off candle. Yeah, it was the FOMC
Yeah.
candle.
Yeah. So let me show it. So if you look now, I will have that if I just draw the FVP here, and I can have. If I just focus on this area and don't click extend, I'll have that POC right here, and that would be December POC. I called it sell-off POC last time, so something like this. That would be it.
Thank you.
So if we lose this 10, 11, guys, we're gonna potentially flush. Just keep in mind, Wednesday, we're gonna have news. I'm not gonna trade Wednesday, but you guys are welcome to take it, right? I'm just not interested in their binary tricks. And why would this SIG also be important? Market's telling me something. What is it? This level right here. What else is there?
Is there 3-month balance?
Yeah, but it also happens to be January developing value area high. If they're gonna accept prices higher, they have to hold on to this, guys. If they don't, what does it mean? Let's go back to the class. What does it mean if they don't?
We're rejecting higher balances.
Okay, that means your target most likely
be the opposite extreme,
which would match 3 months SIG 1 and January value area low. So could you figure out how to play this on the longer swings? Yeah, I would say certainly you can figure this out and play it to the downside and collect some money here. Does everybody understand what I'm saying?
Yeah, so you'd like short the top of the 3-month balance, trim at that December value area low, or it's also the POC, and then see what happens there, but likely take the rest down to the 3-month SIG at the bottom.
That's correct. I would, you know, if I'm already short, let's say they give us this tomorrow, I could trim some of the SPY puts here, right? If I see buying activity, which means that they're defending, that'd be a perfectly okay spot to close. But if they do something like this and you see weakness right here, this becomes a great opportunity to play this out. It'd be here and it would be here. I would look for their behavior right here.
Would that be 80% rule on the higher time frame?
Yeah. This would be 80% on the monthly. You would basically, because this was our November value, which also matches the penthouse, I would say the range box. If you think about consolidation here, this orange, let's call it different color, like this green box. So if you don't extend it, right, you see that we consolidated, we sold off. So now if they peak below it and they try to knock on the doors again, they get a sell off and we put in, let's say 15-minute lower lows, high chance we're going to get this pattern here. A lot of
looking at
people bullish. Yeah.
When looking at the monthly though, but you're trading during the day, you need to respect the time frame, right?
Yeah. So I mean, then I know in my eyes the trend that the auction ended Friday. Friday the auction ended for the top. Unless we do some tricks tonight and gap up, I'm seeing a gap down tomorrow. So from daily profiles on TPO, I saw the auction is complete at the top. So now if we lose this 1075, or let's call it 11 level, if we lose it, then it's telling me you're rejecting this price. Most likely you're going to seek the value lower, right? So I'm not looking to buy the dips till we reach some big levels. So as a day trader, I want to look for opportunity to trade it to the middle of this, which would be right here, right? If I think of the range, 50% would be in here as well. Plus the December value area low is sitting there as well. So that would be a good trim exit for me. And then you potentially catch a bounce here. If they lose that, then again, the sentiments I'm looking to short all the way till we get to this level here, 85-ish, 84 or 77, sorry. Does that make sense? So it presets higher time frame bias and market direction for me.
Gotcha.
I'm not looking to buy everything here. Like I wouldn't consider this to be, for me, this, this would not be a discount, and probably not for many other time frame participants either, 0.5% or less. But if you give me, something, like they did last time, if you think about it, I think they went like 5%, 6. They gave 6% discount and people bought it and wrote it back for 6%. It's not bad. I know it doesn't sound good to Twitter folks, right? Making 5-6% daily, but that's a lot of money. That's tons of money when it's compounded. Does that make sense?
Yeah.
So far, yeah.
So your trades during the day would bias short.
That's correct. Unless something happens in the daily TPOs where we start framing up on every period, then I'll be like, ooh, it's contradicting. You have short-term traders, pushing maybe prices higher. Maybe they push it to that 10, 11 or something, and that's where other time frame participants are sitting with their ask and they sell it. That's a setup. I'm just looking to see, obviously if they reject this value, I'm going to be a little bit more bearish, and then they lose this one, I become a little bit more than just tad bit bearish, right? I'll become extremely bearish for other time frame participants because the value of January, and we don't have a lot of time, right? This is the last week of January. So if they don't hold this, we set up for a really nice flush, I don't know how many points that would be. 200 points. So probably sometimes February, like 15th. Let me see, was that 17th? Let me see, sorry. Trying to find these months on the calendar. And I'm horrible at it.
It's kind of funny they set it up when the big boys are going to report earnings.
Oh, yeah. So the 14th, February would be decent puts for SPY if we lose this 11 and we give it a retest. I would probably play, there's an indicator that I found. I want to see how it works. SPY convert. This one. Let me see. I don't know how it works. I didn't test it, but you can figure out what that level is. Probably 580 something on SPY. You can play some, February 15, 14 puts, like 580s, 585s, and see how much they cost and manage it. Okay, so monthlies, we're in balance of prior, right? If we lose this level, extreme bearishness comes in. And now I flip it to weekly. As I said, I go back.
The indicator is really nice.
Yeah, I'm trying to figure out. Oh, there it goes. Man, I was trying to figure out what that is. Oh, that's pretty cool.
Could you show us again, Shorty? I know you showed me before, but I didn't save it. Sorry.
Yeah, so it's called buy convert. It's this one here.
Thank you.
That's actually so nice for options. That's like, wow.
No, it's pretty good. That's why when I was looking at, when I was targeting my, I guess the 600s, it was mainly, I guess I transferred it here quickly and saw it. But that's pretty cool. I like it. Okay, so now on weeklies, man, weekly structure is so shit. Like, excuse my language, but it's really, really bad. So this is our, last week value that we had, and if you guys look at it, I'm just gonna hide the drawing so you guys can see it. Here's your value. We peaked above the value. We tried to bounce off the POC 127, and prior week value area low is what level? Value area low is what? Would be right at that 1125 zone. So if we lose that level, that means you're rejecting this whole week of price. And guys, there's really not much here. I mean, there's not much here to stop it until we get to this area right here. You know, there are some gaps here, but I don't think these are going to hold. I don't even think this 72 is going to hold. I would think we go all the way down, and then if you use another tool, which is volume profile, which is visual range volume profile, and basically what this one does for the new folks is it's whatever you're showing on your chart, right? Whatever is visible, like from here to here, it's giving you basically the volume profile for. So if I increase this to, let's say, 3 hours, you see how now you're able to see pretty much identical to this. It's identical profile. Does that make sense?
Yep.
Okay, perfect. And on this one too, you could do value area highs and lows. I don't prefer to do that because I want to control what am I interested. That's why I use fixed volume profile. I just want to see volume nodes. You know, you could definitely draw this and you see how the SIGs align perfectly here. I don't do it, but you can certainly do it. You can do developing on it, but I'm not really interested. So, okay, let's go look at the weekly. So like we said, if you lose this, high chance you visit the 72. If they failed that, then we know we're hitting this 81, which would be the setup. And you have I marked my PV value area low. It's probably a good habit to mark the value area high as well. I created templates. You guys can definitely do that as well. So you see here, this is my prior week value area high, and I don't have to spend a lot of time charting. I could have done this chart, guys, probably 7 minutes. I have a plan for tomorrow. All right, so that's weekly, and we are inside the balance, right? We're basically, you know, we popped out of this, and you guys see there's not much structures here. Here, tight value area is indicating what? I don't think we had a lot of buyers, but I for sure know we had sellers, and we know that by the axis. And then ultimately, I turn on the dailies, and I'm like, okay, well, what do we got here? On the dailies, we got a 3-day balance. We had an outside value here. Then we have basically overlapping to inside value where the value area low basically went all the way here. So if, for instance, tomorrow, let's say they reclaim this level right here, I would say between this and this level right here, if they're able to hold this level, what could they target next?
Previous week value area high.
They could definitely target the previous week value area high, but they will have one problem. And what's their problem?
The POC.
POC first.
Okay, what's the other problem?
The skinny belly. Top of that distribution.
Do we have any single prints?
Yes.
No, so I would be concerned about this, right? Right here. So these would be your single prints here that you want to pay attention to from Friday. I would say there's a high chance if they give us this is a blessing. They give us this, we take this short, we can catch probably 10, 15 points on this one or more from here. I would take that short. That's what I'm implying. Okay, so I'll definitely watch this. This is your daily single prints. Let me just extend it. Okay, and then you see the value area low for the day is sitting right here, right about that zone. So you could definitely kind of extend it, right, and include that here. This would look more like this, I would say. This zone is more like this zone here. So if they crack this zone, high chance we go here. I would short it here on the first tap. And that would be this value area high here where the spike was as well. The spike and value area high were at 39.25 if I recall. But maybe not. Spike's actually lower. It's right here. Just gonna mark it, and you guys don't necessarily have to, but okay. And then from this, you formulate the plan, right? So if this is our value area low, right, and let's say we open above it and then we lose it, what do we do?
Wait for the retest to short.
We are more bearish because most likely we're going to explore 611 from here. So this would be another potentially decent short from here, right? If they give you open above, right, inside the value of Friday and then reject, it becomes really good. The best setup I would love is this, and then give me this. Like, let me enjoy like some massive points on ES. So this would be 31 points. And how could you play this? Could I take volume just in this area and hide behind the POC here? Or I could put it higher, right? So if I'm taking this short, how would I play this? I could play it this way. Target this, correct? Let me just delete this zone here. Would this be a decent trade?
Yeah.
Yep.
I could do also this, and that would be lower, but I could probably make this a 3 right at it, something like this. So I could take this trade, and I probably will take this trade if they're nice. Let's pray that they give us this level. I'm not praying for anything else. I just want them to come here. Peak above and fail. Okay. Remember, there's a lot of news. And why do we bounce here? Does everybody understand why we bounced here?
Like
Why do we
access.
this one here? So you wouldn't know that there was access there until they formed it. Remember I said overlapping value area lows and highs, like in this case, like here. You had this 2 days, and you had the value area low and value area low. And look where they bounced. Does it make sense? We've done this setup lots of times, guys, I would say. I don't even know how many times do we do this, where we mark the, value area lows or highs that are stacked like this. Does it make sense, KJ? Was it KJ?
Yeah, that would make sense. It was Ashley.
Oh, Ashley, sorry. Yep, so keep an eye on this, right? See if they're, they're rejecting the value higher, but do they build it here in this middle tier? If they don't, then we know we got the bottom as well. I would just mark this probably somewhere in between here as a value area low, or you could just simply put this here. And now you have a, I would say, pretty decent plan with the double distribution on the top, and this is the separator for us. And now you have a plan. Is there anyone confused? All right. We've been on for about almost 4 hours. I would say 3 hours for sure. I'm gonna do the stock scan. Probably let's do it either tomorrow during the day or tomorrow night, just so I can get some break as well. And I have to take my pain medicine here shortly. So if you guys are okay, let's do the stock scan. I already did it myself. I ran it, looked for some, so it'll be quicker than most. There's some decent buys. I have it up. I'm just I'm actually getting tired of talking.
That's fine, Shorty. Thank you
No
so
problem.
much.
We feel better.
Thank you, Shorty.
Yes.
Yep. Thanks,
We'll
Shorty.
stop it here. If you guys have questions, I'll post the PowerPoint. Please read it. I mean, put some time into this, guys. It can be life-changing, but you guys have to put time. I can't do it for you. I mean, you guys have to execute. So
Yeah.
take the time, put it. If you need help, feel free to message me or anyone in the Discord, and then we'll go from there. If you're interested in joining, we only keep maybe 10 to 12 spots a month. The link is under my Twitter, right? Simple Trader 77. Probably don't have anything open till the February 1st. So if you're interested, it's first come, first serve. And you can see if that fits your trading style or what you want to learn. Oh, thank you.
Yeah, use the link because there's somebody that keeps copying you, Shorty.
Oh yeah,
Really.
yeah, that's true. Yeah, don't use the link. Maybe use the one that Rockets has. There's a lot of copycats, I guess, on Twitter. Okay. All right, guys. Thank you. Have a good day, and I guess go Bills. Is that what everybody's screaming for?
Yay, Buffalo Bills.
All righty, guys. Have a good night. Bye bye.
Thank you. You too.
Thanks.
Bye.
Thank you.
Bye.